1960s.
Kevin, the law on use of the Army goes back to 1807 and then Rutherford B. Hayes and I believe 1878. You can fact check me on that, folks, as you'd like. Kevin Cirilli, can this president use that law to put Army troops in New York, in Buffalo, in Chicago?
The president suggested yesterday that that is something that he is going to be considering. Now, yesterday, the president also had a phone call with his Attorney General, William Barr, as well as attorney generals and governors from around the country, and he chastised them in order to be more tough in terms of stopping some of the violence and the looting. And so this is something, again, I think it gets back to the issue of law and order that the president had campaigned on in 2016, and we're going to hear more about in the days and hours really to come. But I just want to make one more quick point here, and that as much as this is a national issue, it's also an increasingly local issue as well. Towns and communities across the country are going to be having conversations this morning and into the next day and week ahead in terms of how their mayors and how their local officials handled this. And so I think you're starting to see that in New York City. You're definitely seeing it here in Washington, D.C., as well as all throughout the country as communities are grappling with how their elected officials are handling this situation.
Yeah, and we're hearing those conversations ongoing, as you said, and I imagine they will only heat up. I want to go back to something you were saying, and that is some of the open dissent with President Trump's approach so far. What are we hearing from some of the top leadership in the Senate, in the House, with respect to what they hope to see from the president, and who has his ear right now?
In terms of who has his ear, it's increasingly William Barr, the Attorney General, as well as to a lesser extent, but in terms of direct communication. But I think in terms of channeling the discussion, Senate Majority Leader Mitch McConnell, and speaking with staffers over the past day, I can tell you that again that discomfort amongst Republican lawmakers is increasingly becoming palpable, Lisa. And you mentioned at the top of the show this issue of how this is on the minds of so many Americans, a restless night in America, to put it, candidly. But in terms of action, in terms of where the policy is really going to be impacted here, we have spoken for weeks on this program about the next round of economic stimulus. I was speaking with strategists yesterday as well as lawmakers on both sides of the aisle, and I'm hard-pressed to find one person, Lisa, who would argue that the next round of economic stimulus is not going to include some type of criminal justice, civil rights, civil justice reform language. It is going to be increasingly impossible for that not to be wrapped into these next rounds of negotiations. What I don't know and what I'm trying to find out is when that timeline is going to be and precisely what that language will entail. The NAACP has put out within the last 24 hours some language in terms of crafting some of that policy. But again, I think it's unfortunately right now too premature for me to articulate what would be in that type of congressional vehicle.
Kevin Cirilli, great to catch up with you, sir. As always, stay safe, won't you, Kevin, down in Washington, D.C. Tom, I think Kevin touches on the correct point, and that's the next steps on policy. We really want to see Congress get its act together now and push forward with the same urgency that it had 2 months ago, because the collective will over the last several weeks has really started to fade.
I'll let you pick the date, John. It's June 2nd. You can go back to May 29th or May 28th, whatever. And it's a different America. Dovetailing with this, John, is, of course, the unemployment report, the jobs report, rather, with 18, 19, even 21% modeled unemployment that we may see on Friday. So I think the two of them together really dovetail into a new urgency in Washington.
Couldn't agree more with you, Tom, and I think that's the issue for us this coming Friday as well, Lisa. The social unrest together with the labour market paying, as Tom points out, an unemployment rate that is set to be at 20% and potentially near double figures even as we close out 2020.
Yeah, and much higher for Black and Latino communities, which are disproportionately in some of these cities that are seeing unrest. And I do have to wonder, we see stocks yet again shrugging off the unrest. I was looking this morning, the 25 top metropolitan areas in the United States account for half of the nation's GDP. At a certain point, I wonder how much people are factoring this into their equation about going forward, especially paired with the idea that, as you said, John, we are not seeing the urgency from Washington, D.C. when it comes to adding to the fiscal stimulus, and particularly assistance to states and local governments.
Well, on aggregate, they're not right now, with the S&P 500 up 0.5%. Tom, Kevin touched on how different cities deal with this. Were you surprised that New York City went with an 11 p.m. curfew when other cities went with 7, 8 p.m.?
I was surprised, but John, I am not informed on when you set up a proper curfew. Was I surprised? I'm like, yeah, our house was surprised. It was 11 a.m. 11 p.m. That seemed a lot later. And of course, John, we got an earlier curfew tonight. I'll tell you, it was remarkable, John, to see on Twitter the feed of the New York Police Department scanner and the tension that you heard in those many voices of this New York City.
We will cover that tension through the morning right here on Bloomberg Surveillance. From New York this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. Coming up on the programme, we'll talk about this market seemingly detached from what we see all around us in America at the moment. We'll talk about that next with Phil Camporelli of JP Morgan. From New York, this is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. Now that the sun is up in New York City, the damage from late-night looting is seen. A late-night curfew failed to prevent another night of widespread damage, including arrests after a break-in at the flagship Macy's store in Manhattan following protests over George Floyd's death. In St. Louis, 4 city police officers were shot during protests Monday evening. St. Louis Police Chief John Hayden got emotional when speaking about the other assaults on his officers faced at the demonstrations yesterday.
Fireworks were exploding on officers. They had officers that had gas poured on them. And we're trying to figure out what is going on. How could this be?
Authorities say all 4 officers suffered non-life-threatening injuries. Amid racial unrest across the nation, President Trump declared himself the president of law and order and threatened to deploy the U.S. military to American cities to quell the rise of violent protests. And after speaking in the White House Rose Garden, the president walked across Lafayette Park to St. John's Episcopal Church. Bishop of the Episcopal Diocese of Washington, Marian Edgar Budke, was critical of Trump's visit to the fire-damaged church.
He sanctioned the use of tear gas by police officers in riot gear to clear the church guard. I am outraged.
Live from the Bloomberg Interactive Brokers Studios, this is Global News, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Emma, the UK's most awarded mattress in 2019. Try it out for 200 nights risk-free. Made in the UK. Go to emmamattress.co.uk to order now.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
We have seen most clearly in recent weeks the double standard that's around. There are riots in the United States. We see how local governments reacted. And then in Hong Kong, when we had similar riots, we also saw what position they adopted then.
Hong Kong Governor Carrie Lam not missing the opportunity to have her say on the tension in cities across America over the last week. In the markets, not much tension to speak of whatsoever. A little more than 2 hours away from the opening bell, here's your price action cross-asset worldwide. Equities advanced by 15 points, call it 16 on the S&P 500. We are higher by 0.5% this Tuesday morning. Outside of that, we've seen a steeper curve come through in the last week or so. Yields higher again, the curve steeper once more. Your 10-year yield up a single basis point to 0.67%. And Tom, I'd also point out, just to round things out, the dollar weaker for a fourth straight session. That's euro dollar advancing another couple of tenths of 1% ahead of an ECB decision just a couple of days away.
For our global Wall Street audience on radio and TV, let's focus on George Saravelos at Deutsche Bank, who reaffirms the Faro view. He looks for a 115 euro, and that's 3-4 big figures, John. That's a substantial move. John, how does the ECB react to a stronger euro?
There's talk of doing a bigger QE plan, but I'm not sure the stronger euro is quite on the radar just yet, Tom. I think there's a worry that we haven't done enough yet on the fiscal side. And the pressure, once again, I think, is on monetary policy once more this week. That's not what we want to see. Later in the month, we want to see governments in Europe get their act together finally and come to an agreement on the way to move forward.
Yep. Now, there's a nice look at it as we get to June and July. We like to have on multi-asset strategists. They're particularly good if they write short essays. Philip Camparelli of JP Morgan wrote a jewel 4 years ago destroying the certitude of the 60-40 asset allocation. It was an extraordinary essay at the time showing that the canon theory, if you will, sometimes it doesn't work. He joins us today for an update. Phil, it's 60-40 or it's 60-35, a little bit of cash, whatever. What's working right now?
Hey, Tom. Good morning. Good to be here with you. There is a ton of noise. This has been an exhausting and emotional roller coaster, Tom. I mean, just to think about how we moved from, 40 million in initial jobless claims over the past few months, and 25% of all trading days this year, the market has moved by at least 3%. That is staggering. That's noise, though. I think the signals are a couple of the fundamentals that we're looking at. Fundamentals around the global reopening. China's May PMI, for example, over 50. The German IFO in Europe was up versus April, showing a tentative bottoming. U.S. PMI was up in May versus April. And mortgage applications, right? If you think about how important consumer sentiment in the housing market is, mortgage applications have gone up for 6 consecutive weeks. But Tom, the big thing is that technicals continue to dominate. You're seeing, things don't move by 35% because everyone's fully invested. Folks are sitting on $5 trillion of money market funds. $5 trillion. That was just $3 trillion the same time last year. And the real signal that we're taking has to come from the Fed, Tom. The Fed has cut the tail.
Well, this is amazing. And, John, what's so important here is I'm part of that $5 trillion of cash. It's a good feeling, John.
Except your cash is staying there, Tom, and it's not going anywhere anytime soon, I'm sure. Phil, let's talk about that $5 trillion of cash in money market funds. How much of that is just companies that have borrowed an absolute fortune and have had to park the cash before they draw it down?
Yeah, you know what, Tom? I'm sorry, John. You know what? I think it's more retail, actually, to tell you the truth. If you look at when that started to really rise, it was at the same time that we were seeing retail really run for the hills. Because if you think about what institutions do, institutions are far less emotional. I think a lot of that is retail, and I think that's what makes this pain trade so staggering, is the fact that, lower stocks are not the pain trade here. It's higher stocks. If you thought that last cycle's equity market was the most hated rally, what we've seen over the last 45 trading days is unbelievably hated here. People do not want to see this. And I think what the Fed really did on March 23rd, if March 23rd ends up being the bottom, people will remember March 23rd like they'll remember March 9th of 09, right? The bottom of the market. But what the Fed did there, when they said they are going to come in and buy corporate bonds on both the secondary and the primary markets, that will go down as one of the most effective and creative monetary policy instruments in history. And I don't think that's hyperbole. What investors missed in this rally is that because this is a pandemic and a humanitarian crisis, that gave policymakers air cover to really deliver shock and awe. I mean, look what the European Commission announced last week, that they can borrow on behalf of the European Union. They're having an Alexander Hamilton-type moment in Europe right now. And this is all part of what is a staggering monetary policy response and fiscal policy response that for us means you can't be underweight equities here. We were underweight equities in March. I don't think you could be overweight equities either because of all the uncertainty on what the staggered reopening looks like. But, man, being bearish, being underweight Europe, being underweight EM, being underweight the U.S., that's very, very costly right now. So we're just trying to true up all of our positions in this market because I think the tails have been cut.
All right, Phil, if the retail investor is putting cash in the bank, if companies are putting cash in the bank, if you have private equity firms sitting on record amounts of dry powder, who is buying and benefiting from this stock rally?
Yeah, that's a good question. And I think this has a lot to do with non-human beings, actually. I think we estimate roughly 50% of public equity trading is done through computerized trading activity. And when you see the VIX especially gapping like it did in the week of March 16th, when it was gapping to 50, to 75, over 100, that is a forced buyer of S&P 500 futures contract, a seller, of S&P 500 futures contracts. Once the Fed got their arms around LIBOR stopped rising, credit spreads stopped widening, and the VIX is now down below 30 again, which is very important. That brings in those same computers that were selling the market kind of in the mid-March period are now buying the market. And I think that has been a flow that has been underestimated by a lot of investors. Is just a non-human being aspect of this market response.
Phil Caparelli of JP Morgan. Phil, always great to catch up with you, sir. Tom, that 4-minute conversation explains, I think goes some way to explaining why we have a market that is so detached from what we see on the screens, dominating the news flow over the last couple of days.
I've seen this before, John. You and I talked about this yesterday. I, frankly, John, got a lot of mail on it with people, curious about why that is. And it is a separate market. And let us be clear, economics, finance, and investment, John, is the province of the elite. And what we're seeing now in America is not about the elite. It's about a broad cross-section of America removed from these markets.
David Costin at Goldman Sachs will be weighing in on that for this program a little bit later. Looking forward to that conversation. Next up, we'll be catching up with Lou Alexander of Nomura on the labour market and the tension in this country, in the United States of America. From New York this morning, good morning, with equity futures positive 15 points on the S&P 500. This is Bloomberg.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. The future is point. You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing, so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa and Bravitz, 2 hours away from the opening bell in New York. Here's your price action. In the equity market, we shake off the tension elsewhere and the protests and riots across America, with equity futures positive 14 points on the S&P 500. We advance 0.5%. In the bond market, talked a little bit about that steeper curve in the Treasury market. Steeper again this morning, just a little bit, up a basis point on 10s, unchanged hedged on twos. Your yield on a 10-year maturity, 0.67%. And in foreign exchange, we'll try and build on this a little bit later. The dollar weaker for a fourth straight session. Euro dollar up 0.2%. That's the price action. I think in the bond market, Tom, what got a lot of attention over the last 24 hours, Amazon making a comeback to the corporate debt market.
Yep.
And the 3-year paper, I think, got everyone's attention. Record low borrowing costs, 0.4% on 3-year paper for Amazon.
John, you social media Amazon. I saw you tweet that out this morning, the FT article that summarized that. Absolutely extraordinary, John, to see that. What's amazing, John, is the tranches that they did out, and they had a almost record 8-year tranche. And as you mentioned, the short-term paper was just exquisite. It's the same yield as the Italian Republic.
It's pretty impressive, isn't it, Tom? What's interesting is what the money will be used for. Now, I think Amazon are saying it's for general corporate cash purposes, but most people will remember the last time they came in and borrowed money in the corporate debt markets, they made an acquisition. It was Whole Foods. And I think a lot of people are thinking about a similar story this morning. That's the speculation. The company says one thing, but there's plenty of speculation out there, Tom.
Well, whatever it is the strength and the might of technology. What we're going to do right now is drive forward to the Friday jobs report, and there's no one better to do that with than Louis Alexander. He is with Nomura and has an esteemed career in academics out of Yale, out of Stanford, and also in market economics. Lou, I know John and Lisa want to get to what we'll see Friday, but I've got to give you a victory lap on an essay you wrote, I'm going to guess a decade ago, maybe coming out of your public service under Secretary Geithner, where you talked about technology of the haves and the have-nots. You absolutely nailed it then, Dr. Alexander. And now we've got the likes of Amazon borrowing at full faith and credit yields. Can technology, do you just visualize these technology giants just advancing over the coming years and decades to ever bigger, ever more dominant?
So I think one of the questions of the economy over the last 10 years has really been, why hasn't productivity growth been stronger, given how important and how pervasive tech has been? Look, we're going through a real-time experiment of what we can really do with technology, and I think we're going to be positively surprised. So in many ways, I do think this is an opportunity for that. I think the question really is the right industrial structure for that a small number of very large firms, or do you want to see more competition? And that, frankly, is going to be the policy debate around tech going forward.
We're trying to understand, Lou, how these companies right-size themselves in the months to come, the amount of debt that many of these companies have had to borrow. What do you expect corporate behavior to look like in the next several months, and how will it shape growth?
So, look, I think it makes all the sense in the world for corporations to shore up their liquidity at this point, and capital markets are open. Credit markets are open for good borrowers, and so I think it makes perfect sense for them to take advantage of that. Obviously, you're going to have some companies that are going to face losses over the near term that are very large relative to their existing equity base. You think about the auto rental companies, the airlines. They are facing fundamental challenges, and that's going to be a different kettle of fish. But for most corporations who are going to be able to ride this out, it makes all the sense in the world for them to be borrowing.
Lou, as you said, that this market is open for good borrowers, and the bifurcation has never been greater, whether it's the good corporate borrower or a good consumer borrower. And we're seeing that bleed out in the economic numbers with the jobless reports on Thursday as well as Friday that we're expecting this week. Can the U.S. economy maintain some sort of growth trajectory with that divergence intact?
So, one of the things which is different about this shock from others is how concentrated it is by sector. So those parts of the economy that depend on social contact, the most obvious ones being restaurants and entertainment and all of that, are being devastated by this. Other parts of the economy that are frankly much less dependent on that and can adapt to working from home and all of those things are obviously doing much better. And it's very unusual to have a shock like this that has that disparity. So it really starts with that. I think as we come out of this, as we back away from the most extreme version of social distancing, as we learn how to do these things without generating the same kind of exposure, I think you will see those disparities start to diminish. But they're going to be with us for a long time. So I think the real problem is the jobs available for people who have done that stuff that depends on social distancing. They're going to be depressed for a while.
So the U.S. Budget Office came out with a projection saying that it may take nearly a decade for the U.S. economy to recover from the shock that we just saw. What does that mean in terms of the unemployment rate going forward on a sort of sustainable basis over the next 5, say, years?
So, look, I think the experience we had before COVID-19, which suggested that we could get the unemployment rate down to very low levels without having those sorts of problems of inflation we've had in the past, I think that is relevant experience for what where we should try and get to in the long run. But look, we haven't seen unemployment at these levels since the Great Depression. When we had the Great Recession a decade ago, the unemployment rate got to 10%, and it took us 8 or 9 years to get it down below 4%. It's over 15 now. It's going higher before this is over. Yes, it is going to take a long time for us to get back. I'm not sure it's necessarily going to take as long as it did following the last big recession, but it's going to take a long time.
This is the issue, Tom, the number one issue, and Lisa raises exactly the right question on unemployment. Tom, you and I have been talking about this together with Lisa over the last several months or so. We could approach 20%. We could have some real improvement in the back half of this year, but we could still end the year at double figures. And that's going to be unacceptable and should be unacceptable to absolutely everybody, Tom.
Yeah, it's absolutely true. And Dr. Alexander, what's so important about that observation is what it does to inequality. Now, we don't need to go on a Tuesday into the Gini coefficient and all the dynamics of inequality, but has it ever been wider?
You have to go back a long time for it's been worse. We've never had a shock that is more disparate. One of the things I will just note to bring it back to the employment report we're going to get on Friday, we're expecting average hourly earnings to go up by 1.3 percentage points on a month when we lose over 5 million jobs. Now, how do you make sense of that? The way you make sense of that is the jobs we're losing are low-wage jobs. And that disparity between what happens with average hourly earnings and the headline employment is a direct reflection of the inequality of the effects of this. And I do think that is an aspect of this which we can't get away from, and it's going to affect the politics of this. In some ways, these are trends that have been out there for a long time. They're not really new, but it is very much going to sort of highlight those problems, and I think it's going to be an important part of the election.
What is the social policy that begins to nudge us away from this abrupt inequality? I mean, the tradition of Yale academics is Robert Shiller and James Tobin and others where there was an advocacy for a social policy. This is America that's not doing so well on social policy right now. What's the best case to begin to take us from our inequalities?
I think you have to try and address the underlying causes and start from the beginning. And a lot of that is about education. It's about access to social services. So one of the things that's very striking about this is the incidence of mortality around COVID-19 is related to other conditions which are related to economic status and your access to health care. So I think there's some very basic things you can do, starting with health care, but also ultimately coming back to education and giving people the skills not only to have higher wage jobs, but to have jobs, frankly, that can be done remotely. So one of the big disparities, again, is who has the jobs that we can do work from home. That is, in some sense, very much related to those same inequalities in education that are the things we have to start to address.
Lou Alexander from Nomura. Lou, always great to get your thoughts on this programme. Thank you for your time this morning. Lisa, just to pick up on what you were saying on the unemployment rate, I think so many people have repeated this over the last several months, but it's worth repeating. This pandemic has not been the great equaliser, not in the labour market, where poorer communities have been disproportionately hit, both on the medical side and, of course, on the economic side too. And we're set to see it in the numbers once again this coming Friday, Lisa.
I go back to what Fed Chair Jay Powell said, that 40% of those earning $40,000 or less have been laid off or furloughed by this pandemic. You look at that, it is not a coincidence, the unrest that we're seeing, and there is a question of how quickly it can come back online, John, to the point that you've been harping on, which is we're seeing a very bifurcated market with the large tech behemoths gaining and everyone else losing. How do we recover with that kind of market right now?
It's a big question going forward from here. The other big question I think we've got to lean on continually, and we did it yesterday, Tom, we've been beating this drum so hard. The focus seems to be just on the sequential near-term improvement, going from lockdown to reopening. And as Lou Alexander pointed out, you've got to think a lot more about the limits of that recovery, the actual limits. How long will we be in double figures for unemployment? And it could be a whole lot longer than some people realise.
We're going to need to get some glide path here. I think of Olivier Blanchard's work, John, coming out of the financial crisis, where you need to get 3 or 4 months and even 3 or 4 quarters of data to get the glide path to where that level gets back to. And there's a real mystery about that. And John, that, some people say that new level may be set lower than what we knew Valentine's Day of not too long ago.
Looking ahead to an ugly payrolls report this coming Friday. Coming up on this programme, we'll talk about that Amazon bond issue. Record low borrowing costs on 3-year notes for the tech giant. Up next, we'll get some perspective from Bloomberg Intelligence. Robert Schiffman will be joining us from New York this morning. Good morning to you all. With Equity Futures Positive, alongside Tom Keane, I'm Jonathan Ferro. Together with Lisa Abramowitz, we're live on Bloomberg TV and Bloomberg Radio.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. Demonstrators outside the White House, angry over the death of George Floyd, were dispersed with tear gas and rubber bullets. That was before President Trump spoke from the White House Rose Garden, declaring himself, quote, your president of law and order, and announcing the mobilization of federal resources to stop rioting and looting. The president then walked over to Lafayette Park to St. John's Episcopal Church, damaged from rioting. New York's Democratic Governor Andrew Cuomo had some harsh words for the president after Trump's remarks.
The protesters themselves have been making a very valid point. Wake up, America. We're killing people based on the color of their skin. And it is a real issue. The president wants to make it a reality TV show of God and country. Call out the military, and then I go to church and hold up a Bible.
4 police officers were shot in St. Louis during protests last night. They are expected to recover. A police officer was shot in Las Vegas. An Illinois man is charged with traveling to Minnesota, then to Chicago to participate in riots. 28-year-old Matthew Lee Rupert of Galesburg, Illinois, has been charged with civil disorder, carrying on a riot, and possessing an unregistered destructive device. According to the criminal complaint, Rupert posted cell phone video to his own Facebook account showing him passing out explosive devices to others and encouraged them to throw them at law enforcement officers. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg. With a Bloomberg Business of Sports report, I'm Michael Barr. Major League Baseball and the Players Union are said to be far apart to salvage the 2020 season. The players ignored claims by clubs that they need to take additional pay cuts, instead proposing they receive a far higher percentage of salaries and commit to a longer schedule as part of a counteroffer to start the coronavirus-delayed season. The players are said to have proposed a 114-game regular season, according to the Associated Press, up from 82 in management's offer. Done that way, the World Series could extend past Thanksgiving. The union offered scheduling flexibility to include more doubleheaders as baseball crams the games into 123 days, leaving little room for days off. MLB's proposal would lower 2020 salaries from about $4 billion to approximately $1.2 billion. The union's offer would have salaries totaling about $2.8 billion. With the Bloomberg Business of Sports report, I'm Michael Barr.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Global News 20. This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
This is Mike Golick Jr. from ESPN's Golick and Wingo. Every morning, Wingo, Dad, and I sit down and discuss all the news, drama, and highlights spinning the sports world that day. And with TuneIn, you can hear us whenever and wherever you go. Just search Golick and Wingo to start listening today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
A society that does not put equity and inclusion at the center of it is certainly going to eventually come to the places where we're at. This is a moment of inflection. It's a moment of real change. It's a moment that those folks who are out there demanding this are not going to take a commission or a report. They're going to want fundamental change.
Soda. On a tense moment in the United States of America. We don't see much tension in this market. We've repeated that through the last 2 days, and we can repeat it again this morning on our screens. Worldwide, equity futures grind higher of 15 points on the S&P 500, positive 0.5%. In the bond market, your 10-year Treasury, your yield a little bit higher, up a basis point to 0.67%. That's your 10-year yield. And in foreign exchange, the dollar weaker for a fourth session, the euro advancing. Euro outperformance on both FX and equity gets our attention. We'll talk about that a little bit later. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramett. This is Bloomberg Surveillance live on Bloomberg TV and on Bloomberg Radio. And Tom, if you lived under a rock and all you had was a live feed of the S&P 500, you would not have a clue what is going on in the world right now.
Well, it's true. The equity market's really removed. I do want to point out after those comments from the governor of Michigan that in Chicago, a very difficult night, and Governor Pritzker, of course, challenged there. And the headline of the Chicago Tribune says it all as he, quote unquote, battles President Trump. We say good morning, and we're on television. We say good morning on radio worldwide and coast to coast on Sirius XM channel 119 as well. The markets have been extraordinary, and what's interesting, and I know John does this every day, folks, you look look at the S&P percentage change, and then you look at John's favorite Dow Jones Industrial Average and see what that change is. And usually the NASDAQ comp or the NASDAQ 100 is ever so higher. And that's because of the huge concentration of the tech stocks that are out there right now. Robert Schiffman is not an expert on the equity part of this. He's an expert on the credit markets, and that means Amazon and their historic offering of yesterday. He is with Bloomberg Intelligence. Robert, what is so absolutely unique here is these are $1 trillion or near $1 trillion equity blocks with itty-bitty pieces of debt that they basically get for nothing. What does that do to their weighted cost of capital?
Well, good morning, Tom and John. Thank you so much for having me. I like to tell my wife I'm an expert in everything, so I can talk about anything from the financial side of these companies. Listen, this is a case of the rich get richer. Borrowing costs are next to nothing. The weighted average cost of capital for Amazon is pretty close to zero. You got to remember, when you're doing the math, when the equity weight is near 90-odd%, and you're only borrowing 10-year money at 1.5%, on a weighted basis, that gets you to 0.1, 0.2% on a weighted average cost. So it's effectively free money, and that's the main reason why I think you're seeing names like Amazon and Apple in the market right now.
Rob, what are they borrowing the money for? What are they doing with it?
Well, listen, that's a great question. We've asked those questions. Everyone's been asking those questions. If you take Apple as an example, remember that Apple is almost $200 billion of cash, and they just borrowed $8 billion of debt. Right now, I think they're doing nothing with it. They're sitting on it. They've got cash and marketable securities near $50 billion. They generate, depending on the funny math you want to do for their leasing businesses, close to $20-odd billion of free cash flow every year. They don't buy back stock and they don't pay a dividend. So they've doubled their cash balances since 2016, and they could easily double those cash balances in the next couple of years. Even when you're spending incrementally more money to help during COVID, i.e. they're going to spend $4 billion incremental, which appears primarily on a bigger workforce. They still have this huge pool of money. What do they do with it? A few years ago, they bought a grocery business that no one ever thought they would get into. But Whole Foods created a real distribution area for them. Maybe they do more retail. Perhaps they do more transport, more planes, more trucks, even self-driving car business. To help for deliveries over time.
Rob, there's so much that Amazon could do at this point. There's so much, but they really are emblematic of the rest of corporate America here with respect to their borrowing. More than $1 trillion of investment-grade bonds borrowed over the past month and a half, 2 months, 3 months, not much. Is this all just going to the bank and sitting there in deposits, giving the biggest companies the biggest war chest to withstand this crisis and emerge bigger, stronger, and more profitable than ever?
Well, in the near term, the answer is yes. Remember, if we go back 2 years ago when repatriation tax law changes were made, we brought a ton $1 trillion plus of capital back to the U.S., and most of that was used for buybacks. And we saw massive returns of capital, particularly across the tech space, and effectively no debt issuance in 2017 because of that. There's still the capacity for companies to buy back a tremendous amount of stock because they generate a ton of cash and they still are sitting on a ton of cash. But the reality is where rates and spreads are right now, there's an opportunity cost of not borrowing the money and putting it in the bank. So I think that, the reality for something like Amazon, and whether it's whatever you think they might buy, I don't think they're buying anything right now. There's still antitrust reviews. The potential for any large-scale M&A across the tech space is very, very low. There might be tuck-in acquisitions of $2 or $3 billion, but that's not really why you're borrowing this money. You're borrowing this money and putting it away for future use. That future use for them might simply be buybacks, or we've even talked about Amazon potentially initiating a dividend in a couple of years because they have an excess cash problem. But for now, I think these companies are just primarily banking this money, and they'll figure out what to do with it later because it doesn't cost them anything.
Rob Schiffman of Bloomberg Intelligence on the issuance from Amazon. Really appreciate your time today. Thank you, sir. Look, for me, guys, there's a difference between issuing very short-term debt at 20 basis points wider than the Treasury. That's okay if you're printing cash like a big tech firm is right now. Where I take some issue with this is further out on the curve for some of these issuers. Tom, if you're issuing 10, 15, 20, 30-year debt, and you're a tech company, can you tell me what that world looks like in 10, 20, 30 years? I don't think anybody can.
Well, they're each different, but you're totally right, particularly for product-specific companies. The product cycles here can be brutal even for the best. So I really take your point, John. I really think that's true. But still, what's extraordinary to me is we're equity guys, and I think of Mario Gabelli, who says, wait, if you can bring in all this money, just give me some more share buybacks to add to total return.
Yeah, I don't think Jeff Bezos listens to Wall Street in quite the same way as maybe other C-suite executives do, Tom. And I doubt he feels that pressure to do those things, at least not anytime soon. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, at quite a moment in the United States of America, and more coverage still to come. We'll be catching up with Ian Bremmer of the Eurasia Group in the next hour. With equity futures positive 12 points on the S&P, we're up by 0.4%. In the equity market, that's the story. In the bond market, Treasury yields just a little bit higher, the curve just a little bit steeper. We're up by a single basis point on a 10-year yield in America. From New York, live on Bloomberg TV and Bloomberg Radio.
Business is constantly evolving.
This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
At Moonpig, we've got making people happy down to a science. How? With flowers. Research shows that whether small blossoms or giant blooms, roses or peonies, receiving bouquets of any formation causes our bodies to produce endorphins, or the happy chemical. Thank you, Professor. And you too can harness the power of flowers with Moonpig. It's easy. Send a beautiful hand-tied bouquet of happiness straight from our app with just a couple of taps. Heartfelt can happen anywhere with Moonpig.com.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Okay, here we go. With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape. A lot of the other teams that we consider. Or ESPN's NFL Live.
If there are some delays because of the COVID-19.
Search sports on TuneIn to explore these pods and much more. Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
Always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
If the city or state refuses to take the actions that are necessary to defend the life and property of their residents, then I will deploy the United States military.
This is a moment of inflection. It's a moment of real change. It's a moment that those folks who are out there demanding this are not going to take a commission or a report.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. This is Bloomberg Surveillance across this nation and America, waking up to the challenges of a number of days of peaceful protests and indeed looting and riot as well. What we know for certain, the three of us, is last night was absolutely extraordinary in New York. John Farrow, Mayor de Blasio, and Governor Cuomo, they agree to pull the curfew sooner this Tuesday evening.
Which I think makes a lot of sense, Tom. 11 p.m. last night, clearly too late, brought it into 8 p.m. But what I think is really sad, Tom, is what is getting lost in all of the noise. The reason for the protest to begin with, the mission that has been a mission for a long, long time in this country for more social justice. And I hope that comes into sharper focus in the days to come and we get away from focusing on the noise around the riots.
We'll have coverage on this through the hour. Ian Bremmer scheduled to be with us, the Eurasia Group as well. Lisa, what I find extraordinary is what is the next step here? There's all the reporting and, of course, the cable news frenzy and all that. But we've got to get to 11 a.m. this morning where I believe the president will speak.
Yeah, at 11:20, he's going to be visiting the National Shrine, and people are wondering what he'll say with respect to military intervention in cities. We know that he threatened to do that if the local governments can't get things under control. What we saw last night was not under control. There's also a question, though, Tom, of leadership. We're also going to be hearing from former Vice President Joe Biden, the Democratic candidate, later today.
Right.
What will the message be, and what will the circuit breaker be to stop the pattern of violence that we're seeing in cities?
An historic moment. Of course, we're tuned here at Bloomberg Surveillance on television and radio for Friday's jobs report as well. Great to have Lou Alexander with us moments ago with Nomura. And John, the backdrop of this, as you've beautifully stated, is an equity market that's got a very much real risk-on feel. John, do we have a why for that?
I don't have a why. The Federal Reserve, sequential improvement as we reopen, Tom. There are many reasons, I think. There are many whys, but I don't really have a why in a moment like this on why we should be higher. Equity futures up 13 points, up 0.4%. Let's talk about that equity market, Tom Keene. We can bring in the chief U.S. equity strategist of Goldman Sachs, a good friend of this show, I'm pleased to say. David Kostin is with us now. David, you've called this one unloved. I'd call it hated. This move from the bottom all the way up and through this morning. What's your take at the moment?
Well, it's interesting, the definition between unloved and hated. I guess indifference is what Dante said is really the opposite of unloved. But the idea of portfolio managers, they certainly welcome the idea of a higher market. Most fund managers are long biased, long tilted, whether they're a long only fund, mutual fund, or whether they're a hedge fund, they tend to have a long bias. So the rising market has certainly been welcome, and it's been unloved. You could argue your term's hated because most fund managers haven't been positioned to participate fully in this recovery. I will certainly say, as a strategist, I've been surprised at the magnitude and the persistence of the 35% move in the S&P 500. Of course, as you've talked about, no doubt, and others, the rally has been so driven by a relatively narrow group of stocks, primarily in technology, that has helped lift the indexes. But the underlying typical stock actually hasn't necessarily participated as much as the headline index would show. And so that's an issue that has been much discussion with clients and portfolio managers now, because does one continue to own the leaders of the market, the top 5 concentration stocks? Never been this concentrated in history. Even back in the tech bubble of 2000, the top 5 stocks then were like 18%. Now we're talking at 20%. 1/5 of the market is dominated, controlled, or represented by just 5 companies. So we know the drivers diagnostically, and then looking forward, the idea of the cyclical recovery, which has certainly been a focus in the last couple of weeks, in the last couple of days, frankly. But the persistence of that, I would say, is I'm less confident about that. Would focus more strategically on some of the market leaders, and whether that's in technology, whether there's more secular growth and stronger balance sheets. Some of those characteristics, in my view, are more sustainable in terms of their drivers.
Well, David, let's talk about that. It's important. The reopening rotation that's taken place over the last couple of weeks. What is it about that rotation that you don't think is durable? What is it about it that you don't think is sustainable?
So the key issue is the rehiring rate in the United States. The idea is, tragically, we have almost 40 million people filed for unemployment, initial unemployment, over the last 9 weeks. And how quickly, hopefully it will be quickly, but how quickly and how many, what percentage of those individuals who have been laid off or furloughed will be rehired by their employers? The basic assumption a lot of people have been making, around 80%, that will drive the economic activity. And as people leave shelter in place or begin to reopen some of these state economies, does that lead to more sustainability? Well, you've had a big move already in a lot of these companies, and I would answer the question as follows. I prefer and recommend that you own domestically facing goods producers as contrasted with services providers. So every company in the country is classified as either a goods producer or a services provider. And the lessons from China is that the leading edge of the recovery or the restart of the economy, Jonathan, is led by the industrials, not the consumer. So we want to own U.S. companies that are more business to business, goods producing. Those would be a lot of companies in the chemical business, chemical space, some machinery, some aerospace. That would be your trade, if you will, your tactical trade, but strategically still looking for stronger balance sheets and technology to be offering better returns over time.
What's interesting here, David Costin, is small caps. Chris Verone over Strategas has a brilliant note this morning noticing the elevation of small caps, but he asks the Goldman Sachs-like question of do they on an absolute basis advance, and can they even advance on a relative basis versus large caps? Do you have an affinity for small caps right now?
I do not, and the reason for that is strictly on the balance sheet. We know the singular risk in this economic dislocation has been a collapse in revenues here in the second quarter, as much of the country was at home, and just there wasn't a lot of activity, and therefore liquidity and balance sheet strength were key. So the Fed obviously came in with many programs in terms of the support in the commercial paper market or in the IG market, in fact, in some of the fallen angels in the high yield market. But still, the liquidity and solvency are critical issues in the uncertain path of recovery, and therefore would rather own companies with stronger balance sheets, which characteristically are larger companies as contrasted with smaller companies, which typically have more leverage and they're less flexibility on the financing side.
David, perhaps the theme of the year is growing disparity, whether it's in incomes, low and high income households, whether it's the companies that are doing well in the stock market or not doing well. And then the latest from the U.S. Budget Department coming out and showing that the economy is not going to recover in the United States for nearly a decade from the shock that it's just experienced. How long can the U.S. equity market as a collective remain divorced from this underlying economic reality as put out there by the United States?
As you said, it is the critical question for both society and for the investor community about what appears to be clear dislocation between the path of what the economy is sort of going through and where the equity markets, which we know a couple things. Number one, the equity market is a discounting mechanism, so it looks out into the future and brings this forward. So it is clearly anticipating a steady restart, basically implying that there's not a lot of dislocation, whether that's through the second viral wave, various other, it's going to basically be a steady normalization of the process. And that is the first, argument and why the equity market has been rising so much. But we have to understand as well that the stock market is not a pure reflection of the economy. It's definitely much more skewed towards stronger balance sheet companies, for example. It's skewed towards businesses which are more in technology. It's much less in the housing market than the rest of the economy. So they're not purely representative of one or the other. But ultimately there is you mentioned the word divorce there has to be some linkage between the earnings of a company and the overall size of the economy. And the economy is basically driving revenues, and the expectation is business is getting better. You didn't quite get that, frankly, in the commentary from corporate management in the first quarter conference calls that just ended. They were generally more subdued, lots of concerns about the pace of restart. And so it would suggest to me the S&P 500 at these levels is trading at a higher level than I have at the end of the year. Right about, roughly the same level, but 3,000 is a target at the end of the year. And if I think about the risks around this, you're looking at modest upside risk, maybe 5% opportunity, and 5% puts you at 3,200, and that's basically because positioning is light, neutral to light. Now that's where it's been hovering. So investors have not been super embracing, using, Jonathan, your terminology, it's a hated rally. They've not participated. On the other hand, you have the concerns about the pace of the restart, and can you get all these people back so you have a sustainable recovery? And the market, therefore, puts down at like 2750 would be 10%. And it's asymmetrical skew, somewhat to the downside from the risk point of view.
David, I'm happy to wrap up an interview when you borrow a phrase of mine. I'm always happy to lend that to you. David Costin of Goldman Sachs, the Chief US Equity Strategist. David, I hope the family's doing well. We appreciate your time this morning. Much more still to come right here on Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio. I think for all of us, every time we have a conversation about the equity market, it just seems so divorced from the destruction that you see on the screens. Even here in New York City, the smashed windows up and down Lexington and Madison Avenue. Much more still to come on an important moment in the United States of America and worldwide for that matter too. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. President Donald Trump has threatened to deploy the U.S. military unless states quickly halt the violent protests in cities from coast to coast. Trump says he was recommending governors deploy the National Guard in sufficient numbers to dominate the streets. The president says if governors fail to take action, he will deploy the U.S. military and quickly solve the problem for them. After his speech, authorities in D.C. cleared a peaceful protest by using tear gas, concussion grenades, and mounted police. The president then walked across Pennsylvania Avenue to stand before St. John's Episcopal Church. Bishop of the Episcopal Diocese of Washington, Marianne Edgar Budge, was critical of Trump's visit to the damaged church.
The president did not pray when he came to St. John's, nor did he acknowledge the agony of our country right now, and in particular that of the people of color in our nation who wonder if anyone in public power will ever acknowledge their sacred worth, and who are rightfully demanding an end to 400 years of systemic racism.
World outrage at George Floyd's death in the U.S. is growing as the European Union's top diplomat says the bloc was shocked and appalled by it, and thousands marched in Australia's largest city. In France, protests were planned for the evening in Paris and across the country after calls from the family of a French black man who died shortly after he was arrested in police by 2016. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Influential conversations from
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
If the city or state refuses to take the actions that are necessary to defend the life and property of their residents, then I will deploy the United States military and quickly solve the problem for them.
The President of the United States on law and order in the last 24 hours. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance, and we're live on Bloomberg TV and on Bloomberg Radio, getting you set up for your market day. It just feels so alien to talk about markets and markets that are positive in a moment like this for the United States of America. Equity futures are positive, 14 points on the S&P 500, up around about 0.5%. Talk so much about foreign exchange, the weaker dollar for a fourth straight session. And in the bond market, here's a 10-year Treasury for you, a 10-year yield at 0.68%, up 2 basis points. Tom, the focus right now, of course, for many people is not the election, it is social justice. But come November, this will become a bigger and bigger topic as we count down to that national vote.
Well, we haven't had the polling yet, and anyone's looking at the House, the Senate, and the presidential race to November, and the ability, perhaps, of the Republicans to lose all three of those chambers. You call it the presidency chamber as well. We bring in our Kevin Cirilli, our chief Washington correspondent. Kevin, it is remarkable to see any news feed and see the number of officers injured across this nation in the last 12 hours, maybe the last 18 hours as well. We know this president will come to the defense of those police officers and, for that matter, the law enforcement community. How will he do it in the 11 o'clock hour this morning?
Well, the president is anticipated to make remarks, Tom, later this morning, and it comes following his remarks yesterday. But look, the president and his re-election campaign are going to double down on this issue of law and order. That is something that the president campaigned on in 2016. It's something that you're going to continue to see him talk about in the days and weeks ahead. Now, beyond that, former Vice President Joe Biden, he will be delivering an address in Philadelphia later today. This is the first time that the former vice president has ventured out, really, publicly to deliver an address since the pandemic has started and the restrictions were in place. Other things that to be on the lookout for, especially as you mentioned how this potentially could change the trajectory of the dynamics of the midterms. Look to see if criminal justice reform is going to be included in the next round of stimulus.
I'm fascinated, John Farrell. How do they do this in England? I mean, we have the parsing of the National Guard and, of course, those images of the Army from 1968 and, frankly, other riots as well. How do they do this in England, John?
Well, if the government wants to pass policy, if you've seen, because the government has a majority, they can do things quickly. Not quite the same way here in the United States, though I'd hope that on this one issue there was really big bipartisan support. On the government to come in November, Tom, I think this is going to be a huge, huge issue for this market that we haven't quite got our head around yet. There was one huge hedge for many people on Wall Street, and that was that the Senate would remain Republican, and that the Democrats, if they do get into the White House, if they do keep the House, they would not be able to turn the Senate, and therefore they would not be able to reverse some of the policies that Wall Street has enjoyed over the last several years, including that corporate tax cut. And Tom, the risk is that we start to see polling in the coming weeks, and I'm not suggesting this is my judgment, just purely an observation, that the risk is in the next several months we start to see polling that suggests that is not the issue that some people thought wouldn't be there, that maybe it is on the agenda in a way that people didn't expect.
Kevin Cirilli, have we seen polling so far on the events of the last week?
You know, actually, just before coming on air, I took a look at some of the Real Clear Politics averages to Jonathan's point, and you're right. I mean, the president's approval rating has hovered at about 40% and is still in line with his base of support. However, his disapproval rate has increased. So more of those undecided voters have been trending in the past week or so to disapprove of how the president has handled this entire situation. Now, in terms of down ballot races, I think that it's a bit too premature to predict whether or not the Senate would go back into to be flipped back into Democratic control. I would just note that there are incredibly conservative parts of this country that are in line with how the president has handled this, in line with the issue of law and order, and so I'm not sure that right now, today, it would be that we can declare that there would be a massive type of sweep come November.
This is the tension underpinning former Vice President Joe Biden's talk that he's going to be giving on racial tensions later today. How does he play this? How does he cater to the law and order narrative and agree essentially with President Trump that looting and rioting is not okay, while also expressing compassion and support for the protesters who are out there peacefully?
Well, Lisa, I think that's the task that Biden world has been grappling with this entire past several days. And in fact, in conversations with the Biden campaign, I can tell you that is something that they are incredibly aware of. How do you get to this issue of social justice and criminal justice reform in this country, while also immediately squashing the violence that has erupted in communities all over the country. Now, I would note, yesterday when I spoke with Senator Tina Smith, she's a Democrat representing the state of Minnesota, she noted and pointed to outside factors who have been influencing some of the violent protests that you've seen and the looting and the rioting in particular. You also heard that from Susan Rice. You've heard that from Democrats as well. The vast, overwhelming majority of protesters around the country have been peaceful, but this spasm of violence and looting and rioting has sought to try to unify so many different individuals. And the last point that I would make on this, Lisa, because it really gets to directly to what you're asking, is yesterday the D.C. mayor, Muriel Bowser, who is a progressive, in her press conference yesterday, she was asked point blank about how she thought the president is handling this, and she didn't use it as an opportunity to criticize the president. She has been very critical of the president. But in that moment, she said, my interest is to protect the city, just as and that's where the president and I share interest. And so I think it's an incredibly tense time for how lawmakers on both sides of the aisle are going to have to do this. But this is the test of leadership about how and if they're able to stop this violence. And so for Biden, he has to hit this out of the park politically, because if he doesn't, those independent voters, the president, are going to pounce on this. And so the stakes have really never been higher for the president in the 11 o'clock hour and Joe Biden later today as well.
Really strong reporting, as always, Kevin. We appreciate your time. And Tom, I think Kevin touched on something really, really important that too often on programs like this, people forget. That speech yesterday, that address from the President of the United States, as many people hated that address, many people loved it as well. That's how divided this country is, Tom.
It is a polarized nation, and you just saw that in the body language as the president walked over to St. John's Episcopal Church yesterday.
Equity futures, here's a story for you. Up 14 on the S&P 500. We advanced by 0.5%. Coming up on the program to weigh in, Ian Bremer of the Eurasia Group from New York City this morning, live on both Bloomberg TV and on Bloomberg Radio, alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Oculomotor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute.
Emma, the UK's most awarded mattress in 2019. Try it out for 200 nights risk-free. Made in the UK. Go to emmamattress.co.uk to order now.
The IBM Flash storage solution can be broken down into 3 S's. Speed. Retrieve data fast. Scalability. Grow your storage as your business grows. Simplicity. Easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
Get your cook on with Asda, with rollbacks on our 227-gram Butcher's Selection sirloin steak, was £3.55, now only £2.85. And our 255-gram Butcher's Selection rump steak was £3.55, now just £2.75. Have a sizzling steak night. Thousands more rollbacks across the store. Asda. Selected stores subject to availability.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramovich as we count you down to the opening bell. 1 hour away, your equity market is up 13 points, positive 0.4% on the S&P 500. In the bond market, Treasury yields are a little bit higher, up by around a basis point through much of the session, up 2 now on a 10-year to 0.68%. In foreign exchange, the dollar weaker for a 4th session, euro-dollar advancing by about 0.25%. Tom Keene, I can only imagine what it's like to sit at home right now and just flip through the news channels and look at a channel like this, one of the other business networks, listen to it on radio as well, and hear that equity markets are advancing. And yet at the same time, you wake up to the scale of destruction across the United States of America through many American cities.
You know, the technological immediacy of all this, John Farrell, that we've seen is really remarkable and certainly starkly different from the riots of 1964, the protests and riots of 1968 as well. We usually speak on international relations with Ian Bremmer, but today we speak with Dr. Bremmer of Eurasia Group about the international and domestic relations of a better America. All of us are in search of that, and we need to fight our way through in the coming nights and days to find that better America. Dr. Bremmer, you were out on the streets of Manhattan last night as we were before the curfew. It is the challenges of a New York. What is your reading of history of how we somehow get beyond looting?
Well, you know, we know that looting doesn't define the protest movements and nor the depth of the level of disaffection that exists in the United States right now. This didn't start with Trump. It's the reason we got Trump, indeed, is because so many Americans feel like they don't have the opportunity, that the American dream does not apply to them. Those lessons were not learned after 2008, 2009. They weren't learned with the Occupy Wall Street movement. Now they've come back in much more dramatic form, in part because inequality is worse, in part because you have 25% unemployment and 40 million newly unemployed with their slips over the past 2 months, and in part because the least privileged, and most particularly African Americans in the United States, have suffered the most dramatically on the back of this horrible coronavirus. So, you know, these things are cyclical. And the geopolitics and the economic cycles right now, unfortunately, are lining up in a very negative way, and it's going to take us a long time to dig out of this, Tom.
Right. Dr. Bremer, give our international audience, and particularly our younger viewers and listeners, a primer on what Max Boot alluded to in the Washington Post yesterday, which is the similarities of the president's tack to George Wallace of Another Time and Place. How narrow is the president's perspective, or does he speak to a much, much greater part of America than Governor Wallace of Alabama ever did?
Look, I do think that Trump speaks to a large percentage of disaffected Americans. What's amazing, I just mentioned, 25% unemployment, 6 to 8% contraction expected in the economy this year. And yet Trump's approval ratings blended at about 42% average polls, exactly where he was when unemployment was at record lows and when we were expecting moderate growth in the United States. That tells you something about how much support Trump has, how strong it is, and also how fundamentally divided the country is. So if you look at Trump and his electoral game plan for November, he doesn't think that he's trying to win over black votes. I mean, he'd like them not to vote because it gives them a better shot. But Biden's got that locked up. He's not trying to pick up, voters in California or here in New York City. He's going to lose the popular vote probably by several million, but he could still win again. And the way he wins again is by ensuring that his base, which is narrower than Biden's, but much more enthusiastic, feels like coming out to the polls. And that, on the coronavirus side, means don't worry about the virus. Don't wear a mask if you don't feel like it. Try hydroxychloroquine. Maybe it'll work. Get back to work. It's normal. While on the blue side of the equation, it's fear, lockdown, panic, and maybe they won't vote as much. If you add that to proximate danger of national security, domestic tranquility, the National Guard, the military on the streets, maybe they can make voting more challenging in person in places that he really doesn't want to see turnout. And that's what the fight is going to be about in November. You'll remember, Tom, when you were at your Asia group at the beginning of the year, for the first time since I started the firm in 1998, the single top risk was a domestic U.S. concern. It's never been true. You're right. You and I usually talk about the rest of the world because the political risk environment usually comes from the rest of the world. But this year, it's actually the feeling that the system is so badly rigged against disenfranchised white working and middle class, against African Americans facing systemic police abuse. And that is a real concern this year.
Dr. Bremer, let me bring in my colleague, John Farrow.
Hey, John.
Well, thanks for that, Tom. I appreciate that. Ian and I have spoken many times. Ian, let's build on some of that. Whether we are at an inflection point. Do you believe we are at an inflection point, or will we look back at this moment with disappointment that this was just another moment in time?
Look, I don't think that we are on the brink of civil war the way some in the mainstream media were actually saying yesterday. And I don't believe that we're about to become an authoritarian state. The United States is not Hungary. Separation and balance of powers are much stronger. The deep bureaucracy is much stronger. But I do think that the level of political dysfunction in the United States is far deeper than at any point in my lifetime. I was born in 1969. 1968, clearly, in terms of social dissent, was nearly as bad. But now you also have the United States entering into an economic depression, and you have a pandemic that we're still fighting through. And indeed, all of these people out on the streets, many of whom are wearing masks, many of whom are not engaging in social distancing. Here in New York, a lot fewer cases. A lot of other places where we're seeing these demonstrations still actually have an R of over 1.0. In other words, the pandemic is still expanding, not under control. That's unique. Yeah. And as I said, I don't think this is the beginning of the end for the United States domestically. In fact, in many ways, we're going to come out of this crisis stronger than our allies because we've got the robust tech companies, because we export food and energy, You can't forget about that. But our ability to lead the world with soft power, to lead by example, which has been eroding steadily now for decades, certainly post the collapse of the Soviet Union in 91, that is at the lowest point today of our lifetimes. And that will have true, long-standing and structural effect on what the world looks like and the ability of the Americans to shape it.
Yeah. Ian, just sort of tying this together and quickly here, how vulnerable is the U.S., given all the distractions domestically, to some sort of international infiltration, be it a cyber attack or disinformation that could affect the election and disrupt the social unrest even more?
I mean, of course it doesn't help. And at the margins, I think the Russians and perhaps the Iranians and Chinese will still be engaging in more propaganda, fake news. You remember Black Lives Matter in 2016, the largest Facebook site was actually a Russian site. But to be very clear, the damage that is being done here is being done by ourselves. We're the ones that are so divided. We're the ones that are easier to take advantage of internationally precisely because we don't have our own house in order. When the Russians tried the same act with the German elections, they got nowhere. And that's because the country was much less divided.
Ian, always great to get your thoughts and perspective on this programme. Thanks for joining us this morning. I hope you and yours are doing well. Ian Bremer there of the Eurasia Group. I think, Tom, Ian touches on something really quite important, and it's connected to foreign relations. The degree to which events of the last week or so diminished the US moral authority on the global stage. And opportunistically, you saw this with Carrie Lam in Hong Kong in the last 24 hours, just taking a little jab at the United States about how things are playing out here domestically and what the United States and the likes of Secretary Pompeo have said about how things are playing out in Hong Kong.
Yeah, absolutely. And Richard Haas really underscoring that with his new book, The World. I mean, it's just real simple, John. It's lots of little itty-bitty things that all of a sudden add up. And frankly, John, you see it with the G7 uproar where Angela Merkel said, I'm not coming. And now all of a sudden the president wants Mr. Putin to come, but Mr. Trudeau is saying no, no, no. I mean, who knows where that story goes.
It may well turn into the G8, the G9, the G10, the G11, the G12. Tom, where is that story going? What is that all about? What is the objective there? Is it to bring more people in and freeze out China? Or is it just to bring Russia in undercover?
I think it's a president with a unique relationship with Mr. Putin. I believe he put the dime, or the quarter, I should say, in the payphone to call Mr. Putin on that one. I'm not sure of that, but I think so.
I'm not sure that's quite how it works at the White House, Tom, in that bunker with a dime and a payphone. Lisa, I haven't got clarity on that. Do you think is there a payphone there and some coins?
I would argue there probably is not a payphone that President Trump has to Vladimir Putin. I will say it is interesting that Angela Merkel said that she wasn't going to come in a physical person to the G7 meeting. And I wonder how much it was supposed to be an event showcasing how the world was reopening. It was going to be clouded by the ongoing pandemic. So there is some sense in moving it back, especially given the increasingly tense relationship that the U.S. has with the rest of the world, especially with trade tensions and everything else, Tom.
A sensible answer.
John, to your
Lisa
point,
Premise. That's what sensible sounds like, Tom.
Yeah, she's in charge of sensible. I'm not. But John, to your wonderful point through the morning, I mean, these discussions seem almost esoteric when we're looking at what Dr. Bremer described on the island of Manhattan last night.
Could not agree more. The smashed windows through many of the big cities in the United States of America, and then you look at the screens in the equity market and it just feels like another world, another planet, a momentous moment for the United States of America. And yet here we are looking at an equity market which is up by 14 points on the S&P 500. We advanced by about 0.5% this morning. Good morning to you all from New York, worldwide, alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Bramwitz. We're live on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. Amid racial unrest across the nation, President Trump on Monday declared himself, quote, the president of law and order, and threatened to deploy the United States military to American cities to quell a rise of violent protests. While speaking in the Rose Garden, the president promised justice for George Floyd.
All Americans were rightly sickened and revolted by the brutal death of George Floyd. My administration is fully committed that for George and his family, justice will be served. He will not have died in vain.
After speaking in the White House Rose Garden, President Trump walked across Lafayette Park to a church with his way cleared by authorities. A peaceful protest was cleared with tear gas and flash grenades. Earlier, he spoke to governors on a video teleconference with law enforcement and national security officials, telling the state leaders they have to get much together and tougher amid nationwide protests, and criticize their responses. Facebook employees say they are dismayed at CEO Mark Zuckerberg's decision not to take action on incendiary comments posted by social network and President Trump staging a virtual walkout. President Trump's impact on the Republican Party will be tested in a handful of House primary contests today. 9-term Iowa Republican Congressman Steve King, a Trump loyalist, faces 4 challengers and opposition from several GOP groups. Live from the Bloomberg Interactive Brokers studios, this is Bloomberg Radio, global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Given all that's going on in the news cycle, it looks like stores, hotels, and office buildings aren't the only commercial property types that could take a hit.
I don't think any property type is fully immune to the fundamental challenges in changes in demand.
Vic Uppel is CEO at Terra Capital.
Examples of that are, one, in industrial, which there's been a significant investor demand with the rise of e-commerce. But it's important to keep in mind that very few industrial properties are leased to Amazon, and there's a significant amount of properties with weaker credit tenants, such as over-levered retailers. And as those businesses continue to be stressed, you could have significant effect.
And Uppel says he's watching for that significant effect as $2 trillion worth of commercial mortgages mature over the next 5 years. Over $150 billion of commercial mortgage-backed securities are already on the watch list. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Connecting decision makers to a network of new...
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you. Thank you. The National Lottery. Your numbers make amazing happen.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
This
spent all this time closed down, locked down, masked, socially distanced, and then you turn on the TV and you see these mass gatherings that could potentially be infecting hundreds and hundreds of people. The people who are exploiting the situation, the looting, that's not protesting. That's not righteous indignation. That's criminality.
New York Governor Andrew Cuomo echoing some of the sentiment of the President of the United States in the last 24 hours on the rioting and the looting that we've seen across cities, across America. The situation in the equity market, not really reflecting that at all. We've talked about that so much in the last 24 hours. Equity markets roll over just a little bit. We're down 9, call it 10 points, up 10 points rather on the S&P 500, up around about 1/3 of 1%, but we fade just a little bit. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bramage. This is Bloomberg Surveillance live on Bloomberg TV and on Bloomberg Radio. Tom, as always, I'll step away and get ready for the TV program as I count our audience through to the opening bell. In focus, the reopening rotation, the words of Lisa Shallett of Morgan Stanley. And Morgan Stanley have been very constructive off the bottom and on the more cyclical areas of this market in the last several weeks. And that's going to be the focus of this conversation as we get people set up for the opening bell a little bit later this morning.
I think it's amazing what Morgan Stanley's done. They were very cautious into the pull down, and then Mike Wilson and his team climbed on board this March surge. So that'll be important to see. John Farrell, 9 a.m. on Bloomberg Television worldwide. There is the photograph at the failure of Lehman Brothers. And as the camera looks through the windows, there on the computer screen of gentlemen seeing their careers disappear is the Gartman letter. It is 7, 8, 9, 10 pages. And yes, we can talk about gold with Dennis Gartman, but maybe we should talk about the politics of the moment that make up so much of his letter, particularly in the back third as well. Mr. Gartman comes to us 20 miles from where it's supposed to be no protests. It's not the big city. And yet, Dennis, in your neck of the Virginia woods, there is protest, isn't there?
Yes, it's happened in Virginia Beach. It's happened in Richmond. There have been marches in Norfolk. There have been marches in Hampton. Portsmouth, where I live, has not had anything, or where I live very near, has not had anything thus far. And Suffolk, where I actually do live, has had just a very peaceful march. But all around us, my daughter's in the news business in Raleigh, and Raleigh has been on fire for the past couple days. It's just, this is very frightening, very disconcerting, and I think it plays into the hands of the Chinese. I think it plays into the hands of the Russians. The Chinese are going to look at this and say, look, if the United States of America calls in troops to quell the violence, why can't we do the same thing in Taiwan? Why can't we do the same thing in Hong Kong? And I think that's something that people have to start paying attention to.
Dennis, anyone that knows your work knows that you have a cast of Abraham Lincoln and the Elephant Party. Great. But you were one of the first and harshest critics of this president. How does the Republican Party regroup with a one-term Trump or even with a two-term Trump?
It's a very serious question, isn't it? And with the poll numbers coming out in the past couple of days show a very marked decline for the popularity of the president and the possibility of a Democratic president and even worse, a Democratic Senate. How they're going to resolve this is beyond me, to be quite honest. Thank goodness I don't have to make that decision. But it does appear that we have a president who's going to call in the troops and take a very substantive law and order perspective. That's going to have some support amongst his 33% holdouts that are just absolutely Trumpistas from the start. We'll see how that prevails with the other 67% of the population. But I'm glad I don't have to be the one to make the decision.
You would think that given the fact that the prospect of military troops entering America's cities might be somewhat concerning to equity investors, the tail risks are increasing and being added to each day, and yet we are seeing equity futures higher, and this has been a consistent theme, and a lot of people point to Federal Reserve action, in particular the increase of the fiscal deficit. How does this play out in markets? In other words, can Fed and fiscal stimulus basically offset all of the rising tail risks and make you bullish on certain risk assets?
It makes me, the only place that I can actually be bullish even modestly is the fact that I do think the yield curve is going to become more positively sloped. The back end of the curve rates are going to go higher. The short end of the curve rates are going to go lower. and that's going to be beneficial to the banking industry. But otherwise, other than that, I'm hard pressed to come up with a bullish rationale. As Lord Keynes once said, though, the market can remain irrational far longer than you or I can remain solvent, and the fact that the stock market has been predicated upon a bull run, predicated solely upon, as far as I can see, monetary expansionary policies by the Federal Reserve Bank and by other reserve banks around the world. I guess we're not supposed to fade the Fed, but I do find it difficult being bullish. I applaud those who've done it, who've gotten bullish. They have been profited, but I find no sense in them whatsoever.
Dennis, to your point, we are seeing the U.S. yield curve widen quite substantially. The gap between 30-year and 5-year Treasury yields now at the widest since 2017. What is this pricing in? Does this indicate some sort of inflation longer term?
I think it does, Lisa. I think that's exactly what the market is beginning to understand, that thus far the monetary expansionary policies that have been extant around the G7, G8, G9, G12, whatever you want to call it, have not been inflationary, but eventually they shall be, and I think that's what's going to happen. The grain market doesn't make new lows. It starts to hold its own. Gold in U.S. dollar terms has been very strong and likely to continue to be strong. We're starting to see inflationary pressures as far as labor is concerned. So I do think that that's what's happening, and I think that the yield curve gets demonstrably more positively sloped. As I said, the back end of the curve, I think rates can go up past 2% without any difficulty. And it's hard for me to understand even how that we've been under 2% to begin with, because when I first started trading in the 1970s on the Board of Trade in Chicago, the long bond had a 14.25% coupon, and you couldn't give it away. But we're going to go back above 2 or 3 or 4% in the long bond, and at the short end of the curve, overnight Fed funds are likely to remain close to zero. So the yield curve gets demonstrably positively sloped.
Dennis Gartman, too many themes here to talk about. We never even got to gold. What we're going to do is get Mr. Gartman back on, folks, in the coming days to speak to us about the shift in his gold call. He has been hugely successful with gold and yen and gold and euro, and he's made an important sea change there. And we're going to get him on. I promise you we're going to get him on in the coming days with this news flow. Just too hard to get to that call today. Dennis Gartman, thank you so much. Of course, the legendary Gartman letter. Lisa, what are you looking for as you move through the day?
I think that the focus very much is on what President Trump says today at 11:20, what Joe Biden, former vice president and presidential candidate for the Democratic Party, is going to say later. What can be the circuit breaker for the violence, and how does this bleed through into sentiment for the economic recovery at a time when we have very little clarity on exactly what the trajectory of the economy going forward is?
Now, it's going to be interesting to see, and of course the markets will continue to give you coverage there, but really our Washington team working full stop here on the morning in Washington, and of course all of that culminating up to what are believed to be comments by the president in the 11 o'clock hour. On the data front, I want to make clear two things. Oil appears to be breaking out. There's no question about that, with a $40 Brent almost within sight. And the other is the dominance of the euro. Euro-yen is extraordinary, way out through 120, strong euro week yen, and euro-Swissy with a 107 as well. Please stay with us on this simulcast. This is Bloomberg.
Asset managers who see this is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, race to the 5, touchdown! Search classic game replays to listen for free.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the
Search PFF NFL on TuneIn to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
There isn't a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Certainly, we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City and points beyond to our worldwide audience. Despite another night of civil unrest across the country and the ongoing pandemic concerns, futures once again pointing higher this morning. The dollar weakens, continues to weaken, and crude oil pushes higher on better supply and demand dynamics. To get more insight into those equity futures trading, let's bring in Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, I'm looking at Ford Motor for starters, Paul. It's up 1.5% in early trading. The automaker said it expects a second quarter gain on its stake in a self-driving car technology company, Argo AI. Germany's Volkswagen agreed to invest $1 billion in Argo, which will take over VW's autonomous intelligent driving unit. So Ford and VW coming together to develop self-driving cars. Visa's up 0.5%. The payment network said a drop in U.S. volume narrowed in May to 5% from April's drop of 18%. The rebound reflected renewed growth in debit card volume, up 12% for the month. And speaking of payments, you've got MoneyGram International, one of the most active stocks in early trading, up 50%. A person familiar with the matter said Western Union has made a takeover offer for the rival provider of money transfer services. Both companies declined to comment. You've got Western Union shares up 14%. By the way, MoneyGram, the most active stock in early trading. Quest Diagnostics up 1%. The lab testing company was raised to buy from hold at Deutsche Bank as a new analyst picked up coverage. The firm kept a buy rating on Laboratory Corp of America, and those shares are higher as well, just 0.25% or so. Zoom Video Communications up 3.5%. This is the ticker ZM. The video conferencing company, it's due to report fiscal first quarter earnings after today's close. Now, these results are the first since the coronavirus pandemic triggered a surge in demand for Zoom services. So we'll see what that translates into when it comes to earnings and revenue. Looking at retail, more earnings. Cracker Barrel Old Country Store is down 1.5%. The restaurant chain sales for the fiscal third quarter fell more than analysts projected in a Bloomberg survey, though its loss was actually narrower than estimates. You've got Dick's Sporting Goods up 2.5%. Now, the retailer said sales for the first 4 weeks of the second quarter fell 4%. Its stores opened more than a year. That compares with a first quarter plunge of almost 30%. So business is rebounding. And in fact, first quarter results showed e-commerce sales more than doubled at Dick's. And you have RH, the owner of home furnishings retailer Restoration Hardware, up 9.5%. RH reaffirmed a forecast for higher operating profit margins this fiscal year and beyond. I got one more for you, Paul. Seadrill, down 9%, trading at just about 42 cents a share. Norwegian billionaire John Fredriksen's drilling rig company is preparing for a second debt restructuring since 2018. Seadrill reported a first quarter loss of $1.56 billion and said it will give up a listing on the New York Stock Exchange.
Dave, have you ever eaten at a Cracker Barrel?
I have.
Yeah. The Country Boy breakfast is the go-to meal for me. That's the way.
Whatever does it for you. I've been there a couple of times, not often. Of course, the trick is you have to go through their gift shop in order to get to the restaurant. And actually, gift shop sales, relative to what analysts were expecting, held up better in their latest quarter. And the decline was comparable to what you saw in the restaurants. And analysts are expecting worse.
I'm a big fan of the Cracker Barrel. Bloomberg Stocks editor Dave Wilson, thank you so much. Well, it is Tuesday. We are in an election year, and that means we have some primaries coming up here across a handful of states with some very contentious elections to be had today. Greg Giroux, Bloomberg government elections reporter, joins us. Greg, thanks so much for being with us this morning. What are some of the key races that you're looking at today?
It's a busy election day with voting in 7 states. I think the big race is in Iowa, where Steve King, who's been a very visible 18-year member of Congress, is at risk of losing his seat in the primary after he was removed from his committee assignments by Republican leaders following a series of incendiary remarks he's made about race and white nationalism. He lost his seat on the Agriculture Committee, which is important to Iowa, and his opponents feel like that's sapped his effectiveness and that he's no longer in a position to help his Iowa district legislatively.
So it's interesting here. Are there some themes as we go into the primaries here? I mean, it's been certainly a contentious 3 years of the Trump presidency. What's the feeling as we kind of head into the election season?
Well, we're still deep into the primary season. What we're noticing in a lot of the Republican primaries is that even though Trump's approval rating nationwide has sagged amid his handling of the coronavirus and the economy, that he's still pretty popular within the Republican base. And we're seeing a lot of candidates, including in primaries that are voting today, where Republican candidates are trying to out-Trump their opponents in the primary. So we're seeing that first. But in competitive districts and competitive states, I'm not sure if the Republican incumbents will be as comfortable aligning with Trump as maybe they did a couple of years ago. It's going to be tough for the Republicans to hold their majority in the Senate. It's going to be hard for them to overturn the Democratic majority in the House. But we still have 5 months to go until the election, which is an eternity in politics.
It's an eternity, no question about that, even with the tragedies we see across the nation in the last 24 hours. Greg Giroux, you are microscopic about the different districts across America. Tell us about those tug-of-war districts. I think of the one that Lamb took in southwest Pittsburgh, but tell us right now the Democrat-Republican mix in those X number of districts that are just 49, 47, 52, 48. They're just right there on the cusp.
Well, you pick one of them, Tom, that district that Connor Lamb has in southwestern Pennsylvania. That's about a district that voted for Trump by about 49% to 47%, and it's one of 30 districts nationwide that's held by a Democrat that Trump won in 2016. Those districts will be key to determining whether Democrats can hold their majority. But in a lot of those districts, including Connor Lamb, the Democratic incumbents are very well funded, which will help inoculate them from their Republican opponents.
It's interesting, Greg. I mean, we saw the Democrats, take the House last time. Is there an expectation that they can build upon that this coming election cycle?
I think the likely scenario is going to be either a slight gain or a slight loss for the Democrats. That's probably the most likely scenario right now. They basically have come close to maxing out in the number of Republican districts they can win. There are some targets for them, including, a handful of districts around the country, like Bucks County, Pennsylvania, a suburban district that Democrats have made gains in, but Republican held on in 2018.
Tell us about the Senate. Everybody that writes the punditry of politics and political economics of this country is tilting towards careful study of the Senate. And I get the idea that there's a Republican majority. If the Democrats would win, it would be 51-49 kind of squeaker, if we were to see that. What's the quality of the candidates in those races right now? Do both sides feel they've got great horses running?
They both do, and the Democrats have some top-tier candidates in states like Arizona and Colorado. Mark Kelly, the former NASA astronaut, is running. Colorado, you have a former governor running, John Hickenlooper. And in Montana, a state that's voting today, you have the outgoing governor, Steve Bullock, who ran for president. He won re-election in 2016 in the state Trump won by 20 points, and Democrats feel like that bipartisan image will help him in his race against the Republican incumbent there.
We interviewed him like 3 cups of coffee ago.
We certainly did, Tom, when he was one of the umpteen Democratic candidates.
Hold on, we have to stop the show. We're stopping Bloomberg surveillance, even on this really difficult day for politics and protest and riot and looting in America. And Greg, help us here. He ran for office. He was governor. He ran for president, along with 47 other people. Stepped away, and then what's he do? Go back to Montana and says, this is what I'm going to do next?
Yeah, he actually repeatedly denied any interest in the Senate race. He was concentrated on being governor. A lot of governors don't like to move to the Senate because when you're a governor, you get to run everything and you get to appoint the judges and the state party chair. In the Senate, you're more one of 100. So it took a lot of convincing, I think, to get him to run for the Senate and reverse his opposition to a race. But the Democratic leaders, including Chuck Schumer, I think, helped maybe convince him that this was the race to make and help Democrats win a Senate majority.
Greg, are we going to, as we head into the teeth of the election in the fall, talk to us about the money situation? Are we just going to see just ads across the board for all these, not just the presidential, but state and local elections as well? I mean, is this going to be another year of just extraordinary spending by both parties?
Absolutely. There seems to be an arms race when it comes to raising campaign money, and that's just not from the candidates, but also from outside groups, including super political action committees that can raise money in unlimited amounts from any source. What raises the stakes is that you also have it's a redistricting election year, so the people who win governorships and state legislatures this year, a year ending in 0, the census year, will be in a position to redraw political district lines early next year, which is an awesome political power to have if you can win it.
Yeah. Greg Giroux, thank you so much. Great. I'd love to have you on. Great knowledge there, folks, about the politics of the moment. Bloomberg Surveillance this morning, always brought to you by Cohn Resnick Advisory Assurance Tax, for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn Resnick Coronavirus Resource Center at cohnresnick.com/COVID-19. And now with our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. New York stores along some of Manhattan's most prized shopping streets were ransacked. Along Fifth Avenue, there is broken glass and boarded up windows at Macy's flagship stores after a night of looting. As President Trump declared himself an ally of peaceful protesters, federal police drove them from a park outside the White House. Bloomberg's Martin DeCarroll reports the move is spurring condemnation.
As flashbangs and tear gas filled the air, protesters scattered from Lafayette Park before a 7 p.m. curfew. Moments later, it became clear why the officers used force. President Trump crossed Pennsylvania Avenue and Bible in hand posed for photos outside a historic Episcopal church. It had been damaged by rioters the night before, but the show of law and order disgusted Marianne Edgar Buddy, the bishop of the Episcopal Diocese of Washington.
The president did not pray when he came to St. John's, nor did he acknowledge the agony of our country right now.
The White House says the U.S. Park Police gave the protesters 3 warnings before driving them out. In Washington, Martin DeCaro, Bloomberg Radio.
President Trump's Democratic challenger Joe Biden worked to regain center stage through the flood of news, scheduling a speech today on the unrest. He met yesterday with African-American community leaders in his first in-person campaign stop since mid-March and with mayors in a live-streamed event. Biden tweeted last night that Trump was using the American military against the American people as he tear-gassed peaceful protesters and fired rubber bullets for photo. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. And again, the president, I believe, scheduled to speak in the 11 o'clock hour. We'll check on that here in a moment. Right now, futures up 3062 on the S&P level. Futures up 8, Dow futures up 105, up more earlier, but nevertheless, there's a lift to the market with the Dow leading the way on a percentage basis off SPX and NASDAQ composite as well. The VIX 27.93. You see it in the yield complex as well. 2-year yields higher as well. You may really want to note 30-year bond out to 1.47% with recent curve steepening. Dollar weaker this morning, and Brent crude 38.89 made a dash for $40 a barrel. Didn't get there. This is Bloomberg. Good morning.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon N.A. Member FDIC.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants, from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Influential conversations from Bloomberg Television.
Pauline, love may be blind, but it has a new smell. Pauline, the new fragrance from Euro Millions winner Pauline Hinchcliffe.
Tonight's Euro Millions jackpot is a massive £15 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath. Or scoring extra poppadoms with your takeaway. Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Where will 2020 take you?
Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are on the rise this morning alongside shares in Europe and Asia as investors look past worsening social unrest in the U.S. to positive signs on stimulus and the global economy. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 9 points. Dow futures up 110. NASDAQ futures up 15. The DAX in Germany's up 3.5%. 10-year Treasury down 4/30 seconds, yield 0.67%, and the yield on the 2-year 0.15%. NYMEX crude oil is up 0.7% or 25 cents at $35.69 a barrel. COMEX gold is up 0.2% or $3.50 at $17.5370 an ounce. The euro 1.1172 against the dollar. British pound 1.2549 and the yen 108.35. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul Sweeney and Tom Keene, thrilled you're with us this morning. Lots to talk about here, and of course, we are focused very carefully on all that we're seeing across this nation. Just an extremely difficult evening as well. Kevin Cirilli in Washington. Of course, he'll have his show tonight. Sound On, very important in Washington. But much more than that, we're watching the president, and we'll see what comments he has later today as well, perhaps from Vice President Biden. In New York here, Governor Cuomo, Mayor de Blasio, of course, with an earlier curfew tonight. Right now on something that fell way below the radar yesterday, which was an extraordinary bond transaction. It is a small upstart company called Amazon, and they went out, Paul, and it's not so much the size of the transaction or the many different maturities of bonds that they offered, but they went out and had the boldness to do a short-term piece of paper, 3 years, and came in with the same yield as the Republic of Italy.
Yeah.
And that's just stunning. To give us perspective in the why and the how of this is our expert on this, Robert Schiffman at Bloomberg Intelligence, who's just brilliant on tearing apart these tech companies and their financials really across the entire fixed income space. Robert, what was the distinctive feature of the transaction yesterday?
Well, thank you, guys. Listen, this is a classic case of borrow money when you can, not when you have to. The cost of capital for names like Amazon or Apple is effectively at zero. They're paying 1.5% on for a 10-year coupon, but when you do their weighted average cost and think about their cost of equity, with their equity price so high and their market value above $1 trillion, they're basically getting money for free. So they're able to build a war chest for future use that they don't necessarily need today.
So, Rob, it's just extraordinary. $10 billion offering yesterday in 6 parts. I mean, they're all across the yield curve. Then I go to the FA function on the Bloomberg terminal, and I see they have, almost $50 billion in cash and equivalents. So what's really the use of proceeds here other than, as you say so aptly, borrow when you can, not when you need it?
Well, listen, this company has been doubling their numbers since 2016, whether it's cash, revenues, free cash flow. They clearly don't need the money today. The question is, what might they need the money for in the future? It could be as simple as shareholder returns. They don't pay a dividend. They don't buy back stock. Eventually, they may need to do that because they're going to have a cash problem. They're going to have too much. Alternatively, there is M&A. They could be more retail acquisitions. There could be transport acquisitions, entertainment acquisitions. But in the very short term, the probability of M&A with the regulatory environment being so restrictive is unlikely. So I just think they're banking money at 0% cost, and we'll figure out what to do with it later.
So, Rich, are we seeing other big tech names like an Amazon that has, that type of cash flow generation, that the really, just incredible, strong balance sheet? Are we seeing other tech companies tapping the market as well?
Listen, tech issuance this year now exceeds $90 billion. That's more than, in investment grade, that's more than what we saw all of last year and 4 times as much as we saw 2 years ago. So it's across the board. It's the highest quality names. Microsoft just did a debt exchange. It's the first time they've actually issued a new bond in a few years. They're higher rated than the U.S. government. So the cost of capital, again, is so low. The ability to access not just super tight spreads, there's enormous investor demand for high quality tech names at this point. Yeah. But with rates so low, the all-in cost of capital is effectively at all-time lows.
And now we do with Robert Schiffman what we rarely do on Bloomberg Surveillance Coast, folks. We go Modigliani and Miller. Okay, so we're going to go Modigliani and Miller, which Robert Schiffman is a theory that's trotted out somewhere in your course load, and you go, why am I learning this? It's not true in the real world, which is bond cost is the same as equity cost, just as in a simple nutshell. Is that true, Robert Schiffman?
No, listen. The cost of debt is dramatically lower than the cost of equity. And that's why you see companies that are so cash rich. I mean, why did Apple just raise $8.5 billion of debt while they're sitting on $200 billion of cash? It's because it's so much cheaper to borrow money.
Okay,
and
great. But what are they going to do with
that?
Do they have a moral obligation to buy back shares with that? Is this nothing more than a debt to equity exercise?
There's no moral obligations in finance.
Really?
You maximize shareholder value, and typically what that means is you maximize equity holder value, and you use the right side of the balance sheet to do that. So listen, remember, these are names. Amazon might be upgraded by the rating agencies and join this class of AA rated entities within the next couple of years.
Is that their goal? Is that what Jeff Bezos wants? Why doesn't he go to AAA? Come on, he could do a J&J.
Well, They don't have a specific ratings goal. They don't have any debt-specific goals. It's just natural with the growth of the business. They can't spend money enough to avoid ratings going higher. So when you have those scenarios, what you do is that you build excess financial capacity, so when you need it down the line, you have it. And listen, what we saw over the last few months is you never know when you're going to need it. There are a lot of companies, particularly BBB companies, that drew on bank loans, which they never do, just in order to enhance liquidity. Right. So you can never have too much cash. Yeah. At least that's what I tell my boss.
That's good. You gotta be on more. I mean, every time Robert Schiffman comes on, folks, I learn something. I mean,
he knows what he's talking about. He's been doing this a while.
Bloomberg Intelligence. He writes these piercing. He writes the reports are like 4 pages. And you go, damn, I got to read every word of this. I don't have time to do that. I mean, it's not fair.
Exactly. And he's been looking at that TMT space, from the investment grade side for a long time now. And there's a lot of these companies were not even in the market until the last several years when rates got so low, like Apple and Microsoft and those types of things. But boy, with rates right here.
I don't have the numbers in front of me, Paul, but I looked at the Apple decrease in shares of common equity over, I think, the last 6 years or so. And basically they're doing what Intel did decades ago. They're retiring a third of the company over X number of years.
And these tech companies have a lot of stock options. So, I mean, buying back stock just kind of neutralizes that. And then they actually do reduce the outstandings.
And much more to come across this nation this morning. The president awaits later this morning. We need to get the markets open. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
If you can build that flat pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Get your cook on with Asda, with rollbacks on our 227-gram Butcher's Selection sirloin steak, was £3.55, now only £2.85, and our 255-gram Butcher's Selection rump steak, was £3.55, now just £2.75. Have a sizzling steak night, thousands more rollbacks across the store. Asda. Selected stores subject to availability.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow along with Tom Keene and Paul Sweeney, and the opening bell is brought to you by SEI. Crisis emphasized character and partnership, one mission, one community, SEI. Go to SEIC.com/IMS. And the S&P 500 is higher at the open, up 1/3% or about 10 points at 3065. The Dow Jones Industrial Average up 0.6% or 145 points at 25,619. The Nasdaq's up 0.1% or 11 points at 9565. 10-year Treasury down 3/32, the yield 0.67%. The yield on the 2-year 0.16%. NYMEX crude oil is up 1.3%, up 48 cents at 35.92 a barrel. COMEX gold up 0.25% or $4.50 at 17.5470 an ounce. The euro 1.1176 against the dollar. The yen 108.45. Tom and Paul.
Thanks so much, Karen. Greatly appreciate it. It has been an extraordinarily difficult number of days for many involved, including police officers and many injured. The list of injuries just overnight of our law enforcement officers is sobering, to say the least. There has been a cultural crisis in this nation. Usually with someone like Barry Ritholtz, we can sidestep this and talk about the markets, talk about what to do in economics, finance, and investment. But we are very fortunate in that he has just had a piercing discussion with the acclaimed Michael Lewis, author of any number of books. But Michael Lewis taking a real new look at democracy. Barry Ritholtz, what did you learn from Michael Lewis, or what did you argue about with Michael Lewis?
Well, I've learned not to argue with Mike, because even when I disagree with him, I end up coming around to his point of view. One of the things that Lewis described in his book, The Fifth Risk, is the importance of expertise and organizational skills and the ability to execute on a plan. And when he wrote that book in 2017, he just found as all his books do, he found an amazing cast of characters, including former New Jersey Governor Chris Christie, who was the head of the then candidate Trump's transition team. That's a legislative mandate. All the major parties running for president have to are funded by the government, and they have to have a team in place so that the moment the election is over, they hit the ground running, and the transfer of executive power is seamless. Mm-hmm. Obviously, in dangerous times, this is a national security issue, and so it's important to do that well. And to Chris Christie's shock, and Michael Lewis as well, the day after the election, Trump fired everybody on the transition team. Lewis blames all the subsequent problems in this administration on that transitional failure.
So, Barry, what did Michael Lewis, I guess, what was he, when President Trump fired that transition team, what was Michael Lewis, what did he take away from that? Was that just Trump asserting his power? Was that just the you zig, I zag kind of presidency of Mr. Trump?
I think that would be a much more generous description than the one Lewis penned. Look, the United States is a giant entity with tens of millions of employees, trillions of dollars in expenses, and it requires a massive managerial expertise to execute that effectively. Trump's background, according to Lewis, is sort of a solo practitioner who's used to issuing edicts and expecting his staff to execute it instantly. You could do that in a small company. You could even do that in a medium-sized company. Right. But you can't do it in a $5 trillion organization with the U.S. military underneath you and the entire bureaucracy and the Treasury and the Federal Reserve, and go down the list. It requires somebody with a slightly more delicate touch than perhaps the current president enjoys.
We've seen this in Whatever Your Politics, folks. I would direct your attention to the thought-provoking George Will, whose essay in the Washington Post in the last 24 hours there's only one word, incendiary, describes it. Scorching. Whatever your politics, it's worth the read, whether you can agree or disagree with Mr. Will. Barry, I want to transfer what Michael Lewis is saying over to your judgment of the managements. There are companies that just seem to endure with management character and a management tone and grace and cadence where so many others struggle. And I don't mean the comedy of WeWork and, the train wreck du jour, but there's just something about how J.P. Morgan can have William Harrison and find some kid out in the Midwest and drag him back here and have some form of consistency over time. And there's many others besides J.P. Morgan. How do you identify that as a shareholder or as a potential shareholder?
I find the negative screening is much easier than the positive screening.
Thank you.
And I'll give you a word that kind of really makes that stand in stark contrast. There was a Bloomberg News story about 2 months ago about the use of the word unprecedented in corporate quarterly calls. These layoffs are unprecedented. The fall in the revenue, everything is unprecedented. But people understand that. What they want to know are just three things. What have you done in anticipation of disasters, whether it's like this one or something else? How are you managing through the disaster? And what are your plans looking forward beyond the disaster? And I'll give you an example of a company that perfectly epitomizes this, similarly to J.P. Morgan, and that's the Disney company. They are very similar to other companies with a lot of live events and the Disney parks and film, live film entertainment. And, they were very much exposed to this sort of an event. But they had the foresight a year ago to launch and probably 3 years ago to begin planning Disney Plus. And that has quickly ramped up to, I think they're up to 55 million subscribers from almost nothing. And listen, their stock is going to take a hit like everybody else's. But when shareholders look at management, instead of making excuses, oh, no one could have expected a pandemic, when management says, we know we have concentration in live entertainment, and so we're going to diversify this way, you have to give that management credit for not only looking forward, but managing through and anticipating beyond a pandemic. And kudos to them for doing this right.
Are there other companies out there, Barry, that you've seen something similar to that? I mean, the Disney company has generally been perceived as a well-managed company, wonderful collection of assets. Are there others out there as well? Because it's just been just some brutal commentary as we saw those first quarter numbers come out, and it's going to be probably even worse when we see second quarter numbers come out.
So everybody these days are wondering where they're going to get their Lysol wipes and their toilet paper from and their Purell. And retailers have been very much a hit or miss affair. And, Amazon was always the standard in this sort of space, way ahead of Walmart and Target. But you have to give both of those companies, Walmart and Target, a lot of credit for how quickly they ramped up their, let's call it the last mile game. They have known that this was an issue, and they've been chasing Amazon's taillights for a long time. And it was pretty clear when the pandemic struck that they had stepped up their game. You can now get all sorts of things delivered fairly quickly at a competitive price from Walmart and Target. And I suspect after the crisis, we're going to see people continue to shop at places like Target and Walmart online that pre-crisis might never have given that a thought. Yeah. I'm a lazy Amazon customer. I just, it's on I need this, click, ship, and it's done. I suspect a lot of other people are now going to be more open-minded to looking beyond that online retail giant and going elsewhere.
It's very beautiful. Thank you so much. Greatly appreciate it. Really can't say enough, folks, about the podcast and the essays, and particularly his effort with Michael Lewis here in the last number of days. It has been an extraordinary day. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. Now that it's daylight in New York City, the damage from late-night looting is seen. A late-night curfew failed to prevent another night of widespread damage, including arrests after a break-in at the flagship Macy's store in Manhattan following protests over George Floyd's death. In St. Louis, 4 city police officers were shot during protests Monday evening. St. Louis Police Chief John Hayden got emotional when speaking about the other assaults on his officers that they faced during the demonstrations yesterday.
Fireworks were exploding on officers. They had officers that had gas poured on them. And we're trying to figure out what is going on. How could this be?
Authorities say all 4 officers suffered non-life-threatening injuries. Meanwhile, an officer in Las Vegas was shot during a demonstration. Amid racial unrest across the nation, President Trump declared himself the president of law and order and threatened to deploy the U.S. military to American cities to quell a rise of violent protests. After speaking in the White House Rose Garden, the president walked across Lafayette Park to St. John's Episcopal Church. Bishop of the Episcopal Diocese of Washington, Marianne Edgar Budde, was critical of Trump's visit to the fire-damaged church.
He sanctioned the use of tear gas by police officers in riot gear to clear the church yard. I am outraged.
Both the Hennepin County Medical Examiner's Office and an autopsy commissioned by George Floyd's family have ruled that the death of Floyd was a homicide. However, the medical examiner's report listed cardiopulmonary arrest complicating law enforcement restraint and neck compression as the cause of death. The family-commissioned autopsy stated asphyxiation was the cause of death. Global news 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thank you so much. I don't know how you do that. I don't think I could do that. Dow up 95 points here. People looking at the market and going, okay, we're watching it, but we're really not as well. Paul, just extraordinary scenes in Manhattan last night. The sound of helicopters and too many sirens before an early curfew, or a later curfew, I should say, an early curfew. And it was interesting to talk with Dennis Gartman earlier. Paul, he was very clear about the number of really unreported protests that are around in smaller towns in his area of Virginia as well.
Yeah, exactly, Tom. I mean, the civil unrest, we're in the seventh night of it, unfortunately, and obviously this time feels a lot different than some of the previous issues. And you take that on the back of the stress that the country and the world have been dealing with in terms of the pandemic, and it just feels like everything's kind of coming together, unfortunately, in a very difficult time for this country.
9:42 Wall Street time, folks. I've said through the morning that it is believed the president will speak today, and there was an allusion much earlier this morning towards the 11 a.m. hour. I want to make clear that's unconfirmed. We do not know when the president will speak, or if he will speak, I should say, but that's percolating out there in the speculation of the president's Tuesday after what we observed yesterday as well. In the markets, and these are markets on a Tuesday setting up for the ADP report tomorrow, claims on Thursday, and then the jobs report on Friday. We'll have a full court press on the jobs report on Friday with some great guests to help out, and all of it devolves around the labor economy of a troubled America. Please stay with us worldwide. This is Bloomberg Radio.
This is a Bloomberg Pursuits look at luxury. Whether or not you believe amethyst chunks help with emotional distress or rose quartz can promote harmony and love, in the COVID era, the $1 billion market for crystals is outshining diamonds. The value of near gemstones such as quartz, amethyst, citrine, and malachite is holding steady, while diamonds are expected to be dented 20% this year. Sotheby's and Christie's sell them for tens of thousands of dollars alongside meteorites and fossils. If azurite doesn't strike your fancy, how about a piece of a pop star's soul? The musician Grimes, who you may also know as Elon Musk's girlfriend and new mother, is having dual fine art exhibitions titled Selling Out, online through August 31st. The singer, whose real name is Claire Boucher, is selling drawings, prints, photographs, and conceptual pieces, including, yes, a percentage of her soul, valued at best offer. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations, so we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global News 20.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1, and our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
Whoa, just got a Moonpig reminder that it's your birthday Saturday.
Yeah, I set that up.
Oh, do you know what? I forget one time. Okay, I'm in the app.
Oh, the romantic card section.
I'm full of surprises. Now, what rhymes with babe?
How about just uploading a nice pic? No, wait, I'm not ready.
Hey, I love you from every angle. Now for the gifts. Oh, and flowers.
Heartfelt can happen anywhere with moonpig.com. Download the app now.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
This is Darren Waller. Good to have you.
Yes, sir. It's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and the S&P 500 is little change to higher. This as a new bout of stimulus and positive economic signals overshadow social unrest in the U.S. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P is up less than 0.1%. It's up about 2 points at 3057. The Dow Jones Industrial Average up 0.3% or 71 points at 25,545. And the Nasdaq is down almost 0.2%, down 14 points at 9537. The DAX in Germany is up 3.4%. 10-year Treasury, little change, yield 0.66%. Yield on the 2-year, 0.15%. NYMEX crude oil is up 1.3% or 46 cents at $35.90 a barrel. COMEX gold up 0.2% or $3.70 at $17.53.70 an ounce. The euro 1.1172 against the dollar. The yen 108.38. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. We appreciate that. Looking at the markets, as Karen was just saying, we have just kind of a mixed opening here, but the markets have been quite resilient, bouncing off those lows that we saw when the pandemic first swept. We've had a nice 37, 38% bounce in equity markets off the bottom. To get a sense kind of where we are here, we welcome Gina Martin Adams, Bloomberg Intelligence Senior Market Strategist. She's always a welcome guest at Bloomberg Surveillance. Gina, thanks so much for joining us here. As you step back here, we got through the earnings. We have the accommodative Fed. We've got the pandemic as a backdrop. We now have social unrest sweeping the country. How are you looking at markets right here?
Yeah, I think, a lot of things have gone according to plan. And by that I mean following massive fiscal and monetary intervention, stocks have naturally rallied. You've seen the most beaten up names leading the rally, sort of playing a bit of catch up to some of the more defensive strategies that really held strong during the COVID sell-off. Now we've gotten to a point where the technicals have really kicked in, and I think that is drawing more capital into the equity market. It's coming in fits and starts, and it's coming in, sort of kicking and screaming, as investors are certainly not happy with the fundamental conditions and questioning a lot about the fundamental outlook and what the economy looks like in a post-COVID world. But frankly, when you're past the 200-day moving average, when you've got 90% of stocks participating in the recovery, you've got leadership and the value-centric sort of beaten up stuff, you're in pretty strong condition, and that, I think, is what's really driving stocks right now.
Chris Verone at Strategas folks today with a really sharp note noticing, as Gina mentioned, there's some presence pretty well in the last number of weeks. Gina, I just did some fancy Gina Martin Adams math, which I can only do on my HP 12C calculator, folks, on my iPhone. And that is, I took Amazon's proxy of 3-year paper, 0.4%, and I flipped the reciprocal and came up with a market PE of 250, which most people would say is not possible. But nevertheless, it is an indicator of PEs that should be normal and much higher than anything we've ever seen before. What's the new normal PE? I know it's not 100 divided by 0.04, but what is it?
Right, I know, and you guys laugh at me every time I bring this up. But the reality is when we run interest rates through our fair value model, and we say, hey, look, interest rates are going to stay extremely low. We might see some modest upward sloping yield curve develop over the course of the next 12 months, and we might see interest rates start to inch higher, but it just seems extremely unlikely that the Fed really starts to cut or starts to raise interest rates and sort of cut back on the monetary policy infusion. The reality of lower interest rates is the discount rate in your CAPM equation, your discount rate on those future earnings growth is extremely low, and that elevates PEs. I mean, the short answer to a very succinct question is we think that stocks are fairly valued at about 22 times earnings. That's extreme relative to the history, but interest rates are at extreme lows, and the Fed is more than doubling the balance sheet. So that's going to get reflected in asset prices, like it or not.
All right, so Tom's inching into the marketplace. Gina, where should he be looking? What are some of the sectors that we should be looking at right here?
Yeah, I think it's generally cyclicals over defensive. I think we're headed into a more mixed sector view where we really start to question the economic outlook. It's rational to expect that you won't see this sort of really strong rotation into the beaten down names continue for too much longer. Instead, I think you've got a mixed performance of cyclicals over defensives as your general strategy. Our sector scorecard still suggests that the COVID-19 winners are in the best position. And the COVID-19 winners are communication stocks, technology stocks, and healthcare stocks. They're very expensive relative to the rest of the market, but they also have the greatest degree of earnings resilience and earnings stability, and I think that that's going to continue to justify a premium as investors are somewhat reticent to invest in some of the value names as their valuations have re-rated over the course of the last 3 months.
In healthcare, would you predict, and would your experts predict, Gina Martin Adams, that we'll see what we used to call a roll-up? I mean, I know they're there, but scale is everything in that business, isn't it?
Yeah, it is. I mean, the really interesting thing about healthcare compared to, say, the communications and the technology stocks for us is that there still is a tremendous amount of relative value there. It's easy to forget that in the pre-COVID world, healthcare was a severe laggard. As a matter of fact, it sort of lagged the market since the 2016 election season and really had lost its leadership. So there was a tremendous discount that developed in the healthcare space in advance of this crisis. And that's part of the reason why we're seeing, healthcare still at the top of our scorecard. Even though you've seen really strong rotation into this sector in the short term, it's a short-term rotation that has yet to really make up for that several-year period of derating that healthcare went through prior to 2020.
Gina Martin Adams, thank you so much, as always, with Bloomberg Intelligence. I can't say enough, folks, about her courage to participate in the market, Paul, unlike some other people.
You sleep well at night, Tom, with all your cash.
I'm sleeping so well on the way to the poorhouse. Unbelievable. As well, I mean, Paul, it's going to be an eventful morning, and I still don't have the president's schedule. I think he is, with all of us, is just shocked by what we observed last night, and I don't see any clarity yet on the president's schedule as we through the morning. It's 9:54 a.m. Wall Street time and Washington time, and we really don't know what the agenda is for the next 2, 3, 4 hours.
No, the agenda that the White House puts out the night before did not have anything as it relates to this, but obviously events were very fluid overnight, Tom, and as you've been reporting all morning. So to the extent that the president wants to address this on a federal level and a national level, potentially today, we'll see.
We have a great and dedicated team, folks. You wouldn't believe I don't know. Rich, how big is the staff now? Are we up to 70 people make this go every day? And I really want to do a shout out to Team Surveillance that had to adapt extremely quickly in New York, to an extent in Washington, but in New York particularly, to the curfew. We were affected by it like everyone else, and some people really put in some sacrifice in early morning hours to work around that. We'll have much more for you. You need to stay tuned to Bloomberg Radio through the day. We do this with the markets up. We are produced by Richard Truman. This is Bloomberg Surveillance.
Asset managers who sees change.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the NFL.
Search PFF NFL on TuneIn to listen.
On the Bloomberg Business app and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
People have had the rug pulled out from under them overnight.
This could be a lower for longer hit.
The economic news seems to be getting worse and worse.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession. The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
A sleepless time in America. More riots and looting well past curfews as cities struggle to gain control. Coming up, we discuss the dissonance between resilient stocks amid growing unrest, and we'll look toward the medical community for signs of treatment for a pandemic that has not gone away. Right now, let's head over to Greg Jarrett for a Bloomberg Business Flash.
Lisa, U.S. equities have been rising alongside stocks in Europe and Asia as new bouts of stimulus and positive economic signals overshadow social unrest in the USA. The dollar's down for a fourth straight day, and we look at the numbers every 15 minutes. S&P 500's up 0.3%, up 9. The Dow's up 0.6%, up 148. And the Nasdaq's little changed, up 2. The 10-year right now is down 1/32 with a yield of 0.66%. West Texas Intermediate crude is surging up 1.7% at $36.04 a barrel. COMEX gold is up 0.25% at $17.55 even per ounce. The dollar yen, 108.35. The euro, $1.1193. And the British pound, $1.2568. Times might be tough for U.S. consumers, but a growing number of investors are betting that many Americans will fare well enough to keep paying their debts. Money managers like T. Rowe Price and Loomis Sales are buying bonds backed by credit cards, mortgages, and auto loans. That's a Bloomberg Business Flash. I'm Greg Jarrett. Now we continue with Bloomberg Markets, Lisa and Paul.
Greg Jarrett, thank you so much for that. We appreciate it. Market Drivers is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth number one in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Well, as Greg was just reporting, slight lift to the markets here in the first half hour trading. Let's get a sense of where the action is. We go to Bloomberg Stocks Editor Dave Wilson. Dave, what are you looking at this morning?
Today, it's an interesting sort of contrast to what we've been seeing all year. And I say that because if you look at the 11 main industry groups in the S&P 500, the two that are faring the best so far, energy and finance. You look at the same groups for 2020, worst performers on the year, energy and finance. So it's like, we were talking yesterday how investors were, favoring some of the beaten down areas of the market. And it looks like you're getting more of that in today's trading. And what's happening in terms of industry groups kind of reinforces that move.
Although with financials, there's a reason that I find really compelling, and that is a steepening yield curve. We're seeing the gap between 30-year and 5-year Treasury yields rise to the highest since 2017. I'm curious as to why, given the fact, yes, we do have more debt sales from the U.S. Treasury Department. Yes, we do have, the Federal Reserve, though, that's pinning the front end of the curve. Yet inflation expectations, nowhere.
Yeah, absolutely. I mean, that's sort of where we are at this point. And there's a lot kind of riding on the Fed's moves when it comes to buying treasuries, when it comes to this phrase that keeps popping up in some of the strategist research that I've seen, yield curve control, the whole idea that they may be targeting certain interest rates for different maturities of debt, or at least that would be a goal down the line for monetary policy. I mean, that's something that has people's attention at this point. So when you put it all together, I mean, I kind of step back and say, you go back, say, 30 years when the banks were really struggling, and how did they manage to get out from under? It was because, you saw gaps widen in the bond market, giving them the ability to make more money. So,
I'm sorry, I have to interrupt, but we have Secretary, SEC Chairman Jay Clayton speaking. So Bloomberg Stocks Editor Dave Wilson, thank you so much for that. We'll get back to you in the next hour. SEC Chairman Jay Clayton speaking with Bloomberg's David Weston right now at the Bloomberg Invest Conference. Let's take a listen.
We at the Commission are committed to an inclusive and diverse operating environment and supportive environment. And I think a lot of people who have positions like mine in organizations are focused on that today, making sure that our people feel supported and that it's not just a commitment today, but whatever we've done in the past, whatever we're doing today, we know we need to do more in the future. I think that's how I'm looking at it from an operational and personnel standpoint.
Of course, we have an issue of safety and well-being. At the same time, there are markets as well. What are we seeing in the markets?
Yeah, we have a job, David. We have a job to continue to oversee the markets, make sure that they're functioning fairly and transparently. And look, I never try to be a market prognosticator. That's not my job. My job is to be the referee, to be fair. But what you're seeing in the markets today is you're seeing the markets look down the road as they always do. The markets reflect today's assessment of where we're going to be tomorrow. And I think the markets are looking down the road. They continue to anticipate a recovery. And that's what we're seeing in the marketplace today. And that's why maybe the markets are not moving as you might expect if they were looking at more current events.
If you look back over the last 2 or 3 months now, we've had a lot of market movement, a lot of volatility, precipitous drop in the stock index, come back a fair amount as well. Have the markets performed the way you would hope they would perform?
Well, yes. the answer to that is yes. Let me qualify that by saying performance being functioning. Now, again, I don't pick prices. I don't want to do that. Our job is to make sure that they're fair, efficient, that they're transparent, that people can make the judgments that make our markets work. And I've been very pleased from that kind of operational perspective. And I'd be remiss not to mention that the actions of the Federal Reserve, the Treasury, in conjunction with Congress and the administration, to provide certainty, to provide liquidity through the most challenging period so far, truly remarkable. If they haven't acted as quickly and as decisively as they had, I don't know that I'd be able to say that function has performed as I'd like. So a real hat tip to just across the government response to the uncertainty created by the pandemic.
Jay, if we go back to the very founding of your organization, 1933, 1934, it was founded on disclosure to investors, so investors could make informed decisions. The things that we need to know today to invest may be different than they were just even a year ago. Given this pandemic, issues of business continuity, of the way we treat our employees, does that change your attitude at the SEC about what needs to be disclosed, the level of it? How's the disclosure been on those sorts of issues?
David, you hit the nail on the head. It doesn't change the fundamental principles of our disclosure-based regime, which is companies should communicate with their investors the information that is material to make an investment decision. Now, what that is, depending on the environment and how it changes, may be different. And that's exactly what we've seen in the last earnings season. We're not seeing companies disclose, okay, here's where I was in January from an earnings per share point of view. Here are the few things that changed, and this is why you can expect a few cents more, a few cents less going forward. We're seeing disclosure around, okay, here's what happened to my operations. I'm able to operate in these areas like I used to. These areas are severely constrained. Here's what that means for my revenue. Here's what that means for my liquidity position. Here's how I've borrowed more money or raised more money in other ways. That kind of information is what investors are looking for. And you hit a very important one, which is operationally, when we have to be concerned about the health and safety of our employees, the health and safety of our customers, the health and safety of those around us. How does that affect our operations? And what more information do companies need about health and safety to better operate, to better serve their employees, to better serve their customers? All of that is new, but it does fit within our fundamental principles-based disclosure regime that I'm so thankful we have.
Talk about specific issues in relation to enforcement having to do with COVID-19, because there have been various reports of companies making claims that perhaps are unsubstantial and maybe misleading investors. Also, some reports that perhaps some public companies were not entirely truthful in applying for some of those PPP loans. What's the SEC status in enforcement of those sorts of issues?
David, we have let me put it this way, on the claims that look suspect or clearly speculative or just on their face fraudulent, our enforcement team is out there. They're shutting down trading in companies that would do that. And we need to be. People are counting on us to look at those kind of claims, quickly assess whether they have any validity, and then, where appropriate, shut down trading so we can find out if tales of riches to come are in fact true. That's our job. I can't thank the women and men of the enforcement division enough for being vigilant in this area. I think the number of trading suspensions is into the 20s. I recently had a call with my international colleagues, and my international colleagues gave our enforcement division the gold star for quick action in identifying these types of scams and shutting them down. So that's really kind of a frontline immediate job we have in terms of disclosure and loans and that. Look, what I've said to companies is be consistent across your community. If you're communicating with the marketplace, that communication ought to be consistent with whatever you're telling the government about your need for support. And by and large, I think companies are doing that, but it's important for good corporate hygiene, trust, that if you're telling the government you need money, you're telling your investors you need money.
What about some of the initiatives you were working on before the pandemic came up? Talk about like revisions to proxy rules. Do those continue apace, or do you have to put those to one side?
No, we have not put our policy-making agenda to the side. We are when you talk about organizations being affected in different ways by the operational constraints of social distancing and the health and safety structures that we live by, we're a very lucky organization. We can operate fairly effectively in a remote capacity, and we've been doing so. And look, the women and men in those policy-making divisions, they're committed to improving our markets and modernizing our markets. I'm not going to put that on hold unless I have to.
And so, for example, the proxy rules, where do they stand now?
They're on our agenda to be finished in this fiscal year, and I expect to have them finished in this fiscal year. I'm so pleased with the rigor that our staff has applied to all the comments we've received, and I think we're on schedule to finish them during this fiscal year. That's September 10th. People don't know about the SEC fiscal year, so by the end of this period.
And how do you feel about bringing people back to work at the SEC? I think you said at least until July 15. Do you think that that's realistic?
Well, David, I do think it is realistic because we are able to function. I mean, every organization is different, and I'm not making choices for other organizations, but this organization functions very well in a virtual environment. There are a number of functions that we have that would improve with people on site. There are some functions where you do need people on site. Look, we live in a country where due process is important, and we have people who we're bringing actions against. And if they want the benefit of being interviewed face to face or being able to, in as virtual a face-to-face environment as possible, we need to provide that to them. We believe in due process. So those types of things we have to do. But by and large, we can operate very effectively remotely. And what I want to do is, as things get back to normal, and I hope they do, bring people back in those areas that are most acutely affected by remote working, and then go from there, keeping health and safety front of mind at all times. So I have the luxury of that, given the way we work. I know others don't, but that's how I'm looking at it here.
Jay, let's turn to another subject that's very much in the news these days, and that is China. And you have been outspoken on one aspect of this, which is certain risks that American investors have investing in Chinese publicly traded companies. My question is, do you have the tools you need to protect American investors from those risks?
So, David, let's just articulate those risks fairly clearly, and then go to your second question. The principal difference between Chinese companies listed on U.S. exchanges and other foreign companies listed on U.S. exchanges is the ability of the PCAOB to inspect audit work papers of those companies. For my money, Sarbanes-Oxley had a lot, but the two things Sarbanes-Oxley had that were the most benefit for investors were the requirement to have an independent audit committee that was intimately involved with the preparation of the financial statements, the financial presentation of the company, and PCAOB inspections of audits. I mean, the bedrock of our system is good financial information. And this asymmetry, you can call it an unlevel playing field with Chinese listed companies versus other companies from non-U.S. jurisdictions listed, has gone on for too long. And first step, let's make sure investors understand it. Second step, and the administration is now looking at this, Senator Kennedy and Van Hollen have a bill that has a very sensible approach to this, which is give people time to level that asymmetric or unlevel playing field. Now we know about it. Now we got to figure out what we're going to do about it.
Well, is disclosure enough in this situation as a practical matter? I mean, there are now proposals up on the Hill, as you know, the Senate has passed it would say if a company, I think the rule is if you don't allow access to the audit papers for 3 consecutive years, you get delisted. Do you need that kind of power?
Well, first step, disclosure, but I do think that we need to consider whether more to level the playing field. And I think the bill you mentioned, the Kennedy Van Hollen bill, it's a very sensible way to look at this if you're going to do more, because it gives people a period of time to level the playing field before you would take any action. I'm not a guy who wants to take like precipitous, hit the nail on the head with the hammer tomorrow, but I like the way they've approached it in that there's a period of time to come into compliance, and if you don't, then it's time to take measures beyond just disclosure.
Jay, from you having watched this over some period of time, and I know you don't want to name any individual companies, so I won't name any individual companies, but is it across the board with Chinese publicly traded companies, or is it more a problem with some of the smaller or maybe up-and-coming ones as opposed to some of the really big mega-cap companies that we all know the names of that have been publicly traded for a while?
Well, David, you bring up a good question. A point that applies in every market. Financial controls, audit procedures, and the like, they're different for larger companies than they are for smaller companies. And there are a lot of smaller companies that have operations in China that are listed on our markets. And investors might look at those differently from the multi-caps or from state-owned enterprises. And I'm not an expert on international investing, but I do know enough to know that you shouldn't look at a particular jurisdiction in a monolithic way. You should look at that as to whether you're looking at a smaller company, an international company that derives a lot of its revenues from outside of that jurisdiction, or a state-owned enterprises, which has its own risks and reward profiles.
Jay, do you talk with your counterparts who are security regulators in Beijing, in China? I mean, there have been times when the Chinese government has said, we really want to try to coordinate, we want to harmonize, we want to open up our markets, our securities markets. Is there any prospect of actually some of that harmonization coming about?
Look, we do talk. I talk to my counterparts around the world. There's nothing that I have said to you that I haven't said to them, and that this is a problem that I believe needs to be addressed. And I hope it can be.
Are you hopeful? Do you think it will be?
Look, I'm an optimistic guy, but I'm optimistic because I know that at some point, hope is not a strategy. You got to do other things as well.
So you said the legislation that's pending, it's been passed in the Senate, is I think you said sensible way of approaching it. Is it doable? Is it something that, as you look at it, the SEC could enforce without too much difficulty?
Oh yes. No, it's a sensible piece of legislation, and it captures the issue in a way. Look, I try very hard not to tell Congress what to do. It's the other way around. They tell me what to do. But this is a very sensible way to approach a problem that's been around for a while.
Jay, let's turn to another subject that you have talked about, and that is supposed ESG, environmental social governance issues. And there's a lot of people saying we should have a different method of disclosure, ESG. Certainly, investors seem to be taking that into account as they're making investments. We watched some of the indices. Give us your thoughts on what the SEC can, should, or should not do to really facilitate investors understanding the E, S, and the G.
Well, David, it does in each of those cases. Let me say two things. In each of those cases, it goes back to materiality. What is important to a capital allocation, to an investment decision, whether it's governance? We talked about the PCAOB inspection and audit committees. Do you have a well-functioning audit committee? I want to know that when I want to know about G, when I allocate my capital to you.
We're listening to Jay Clayton, who's been speaking with David Weston of Bloomberg Television, talking about a range of issues from the way that the market performed to the likelihood that there will be some sort of sanctioning or curbs or further regulation around Chinese companies that list in the United States. Interesting to hear his tone, basically saying, Paul, that had the Fed not stepped in and had the federal government not stepped in with their incredible fiscal and monetary stimulus, there may have been a problem with markets, but they managed to deal with it.
Giving some kudos to the Fed as Chairman Clayton. You're again really talking about how the pandemic has changed the operations of the markets and how the SEC looks at companies, looks at markets, and disclosure around COVID now and also in the future.
Yeah. And meanwhile, he's doing this against a backdrop of a very resilient market, with markets continuing to gain. Let's get a check on those markets. Greg Jarrett has that for us with a Bloomberg Business Flash. Greg.
Stocks continue to edge just a bit up, Lisa. Banks are leading the gains on the S&P. Gun makers extended rallies in the wake of President Donald Trump's promise to deploy large numbers of troops if cities and states don't act to contain violence from protests over police brutality. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is up 0.4%, up 13. Dow's up 0.75%, up 195, and the Nasdaq is up 0.2%, up 17. The 10 years down to 30 seconds with a yield of 0.66%. West Texas Intermediate crude oil is up 2.25% at $36.23 a barrel, while COMEX gold is up 0.3% at $17.5540 an ounce. The dollar yen 108.45, the euro $1.1184, and the British pound $1.2565. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Wow, busy morning here. We're taking a look here at an interesting story that we are seeing from Bloomberg Business Week about private equity firms. They've been really big investors in the hospital business, and they've also been beneficiaries of some of the bailout money. David Kozinski, Bloomberg Business Week reporter, joins us. David, thanks so much for joining us.
I think he's getting up right now, but it really is an interesting focal point because private equity was sort of carved out of a lot of the programs passed by the federal government, with them saying that they do not want these firms to be beneficiaries, and yet they have been such huge investors in the healthcare industry and hospitals in particular that there's been an extra emphasis, Paul, on how to parse out the healthcare considerations with the efforts on the part of lawmakers and others to keep money away from private equity.
Yeah, so let's welcome David and David Kozinski, Bloomberg Business Week reporter. David, thanks so much for joining us here. Lisa and I were just talking about your story here, private equity really investing in the hospital business, and they've received some bailout money. Give us a sense of kind of the scope and scale of this.
Well, the scope is still we're still kind of digging through the numbers. There was concern in the administration and among some lawmakers about private equity not getting bailout money and tried to target that money toward the needier healthcare companies. However, we found there's this tranche of loans. It was $100 billion in interest-free loans that HHS decided to give out in late March and early April. And while none of it went directly to private equity companies, the portfolio medical care companies they owned got more than $1.5 billion.
So can you walk us through how they managed to get this, where the money went, especially given some of the sentiment that you talked about, trying to keep money away from private equity-backed firms?
Well, all the big boys got it, Apollo Global, KKR, Cerberus, those private equity firms have been buying huge stakes in medical care companies and in physician staffing companies over the past few years. And it was easy for them to get it. HHS, I interviewed Seema Verma, who is the administrator of CMS, which is the Health and Human Services Department that administered the loans. And she said they didn't ask who the ultimate owners are. Anyone who wanted money and said, "Hey, we're going to be losing some income because of the elective surgery being banned during the COVID crisis," you just put an application, and the feds would send them, in some cases, hundreds of millions of dollars to the subsidiaries of the private equity firms.
David, I'm curious, there has been an emphasis by private equity firms to take stakes in hospitals that provide lucrative operations, such as the elective procedures that have been put on halt by the pandemic. Has this been one of the main sources of hurt at a time when hospitals are at the very epicenter of treating and caring for a lot of the people out there who are struggling with the effects of COVID?
Yeah, elective surgery is a profit center for for most medical providers. But what's interesting about this is that, it also hurts some of the safety net hospitals, the ones who deal with, who don't have the billions of dollars in cash reserve that Apollo does or that KKR does. So some of these safety net hospitals actually were unable to apply because the money was gone. So many of the big for-profit hospital companies, the corporate owns and the private equities got in there, got all the money, and the struggling providers weren't able to get money in time. So it is a problem, and unfortunately, HHS didn't do much to target the money towards those who needed it the most.
So how have they done just overall in the hospital business of private equity firms?
I think they've in the past 10 years, they've made a lot of money. I think in the last year or so, there's been some problem with KKR and Blackstone because they're under fire for the surprise billing scandal or surprise billing issue where they staff in-network emergency rooms and surgical centers with out-of-network doctors. So if you go and get a surgery, you might think you're covered for the room, but you'll later get a surprise bill for, sometimes tens of thousands of dollars from the surgeon who was out of network. There's been such a public outcry about that Congress has been pushing to ban it. And KKR and Blackstone, who are the two biggest companies, they own Team Health and Envision, which are the companies which are at the center of this. They've spent millions of dollars trying to fight that off. They have been struggling because there is a sense that the public outcry is going to lead to a restriction on that. But overall, they've made it's been a hugely profitable sector for private equity.
We're speaking with David Kochaneski, a reporter. Sort of tie this all together, why is there so much opposition to private equity among hospital ownerships? I'm just trying to figure out whether they have acted worse than any other hospital operator or investor, given the fact that these issues have been considered endemic throughout the entire industry.
Well, I think it's hard to paint things with a broad brush, but I do think if you look at the actions of the individual companies, some of them have been at the forefront of the biggest and what are considered the most predatory actions, like the surprise billing situation. We also mentioned Cerberus, which got tens of millions of dollars in low interest loans. They have bought. There's a hospital in eastern Pennsylvania that they have been trying to sell. And in the middle of the COVID crisis, they threatened to close it down unless they were given millions of dollars from the government of Pennsylvania. So there is a sense that the healthcare system in the U.S. has been